Good morning. Happy Monday. The hell's going on, guys? Sorry about the delay, the 4 minute delay. I was busy trying to make a real hot new Instagram story for the kids, Gotta do it for them. Get some nice sunny weather here in the city today. Looks like it's gonna be a nice week. Really feeling it. Get the wind blowing on my face right now. Nice and awake. Anyways, what the hell's going on over here? I see a lot of different headlines, a lot of different stories around the world. We're basically break even to start the morning, so nothing wrong there. Nasdaq is down a little bit further, to be expected from the new all-time high. Get some of that preliminary action. Bond market is basically hanging out. Not much going on there. Crypto market is really where the interesting stories are, so we might as well start there. This is what I mean by headlines. Let me just turn this off. Who cares about the pre-market? If we take a look, let's first of all let's take this from an angle of understanding, from a contextual view, that we've seen some pretty wild price swings on Bitcoin. Now, I've talked about since basically last year that it doesn't matter. I really don't care what price does in terms of movement. We can talk about it a little differently now because I think Coinbase going IPO'd. I think we can give it a little bit more of a, let's say, stable benchmark or some sort of understanding of, okay, this is something people care about now. Think about, we have a $2 trillion crypto market. It's something that we can talk about a little bit differently in the lens and gauge of, okay, people are going to be looking at this as maybe one of our look tos. Like, we have the S&P, the Nasdaq, and we look at gold, we look at silver, we look at the bond market, we look at Bitcoin, right? And so we've done that before, but now it really has picked up the pace. So let's take it a little bit more seriously in terms of the amount of monetary value. Again, we've had like 40% price moves on Bitcoin, 30%. I've talked about basically by the end of last year that we were going to get into correction territory, just start correcting nonstop, and the price didn't matter. If we think about it now, it's over $1 trillion. This price move here, at the end of the day, it doesn't matter, but it's still a lot of money. And so if we think about from high to low here, it's about 21%. 21% of $1 trillion over $2 trillion crypto market. I don't think anyone really knows the true number there, because again, we're kind of exchanged out of our mind in terms of where the money is and everything else. But if we call it $2 trillion crypto market, and then you lose 21% on Bitcoin, that's quite a bit, right? Now, the thing to keep in mind here is that it's on the weekend. We have a 24-hour crypto market. We always get the big price moves over the weekends. And this is usually what we saw to start, was actually a retail start, and then the institutions taking advantage, realizing that, okay, everyone's at home trading crypto over the weekend. This is when the price action is going to happen. Now, what's also important to realize here, and this is what the headlines and stuff are not talking about, and the problem is that when you get a big price move over the weekend and there's a bunch of selling, are those normal everyday people trading that's causing a $2 trillion crypto market to take profit besides Dogecoin? Why was Dogecoin up and Bitcoin and the rest of cryptos down? Because the big boys, not normal everyday people. And why would that be happening? Think about what's going on here and why this moves means basically nothing, and why at the end of the day all that comes down to is a supply and demand situation here. And most likely, more than anything, really just has to do with where we are in terms of the inflation trade. If you go back to what I've been talking about maybe over the last 2 months or so, and I think it's a good way to approach the inflation gauge, is that inflation, when we have an inflation number, we don't include cryptos in there. It's a $2 trillion market, and if you added that to any of the other inflation expectations or gauges, the amount that this has grown would be a part of that and show massive appreciation in terms of inflation. I would say over here, if we start to actually look at this and go from an institution's perspective, why are institutions picking up Bitcoin and cryptos? And now we've have an IPO and are even buying Coinbase and thinking about the value there, $100 billion value possibly in these ideas. And then when we talk about taking profit here, it's lining up with the reinflation trade. And I'm not saying like the whole way that growth reacted to yields and then stopped reacting, and now we're getting a reaction in Bitcoin. But if you line it up with coin going live, we now are solidifying where Bitcoin is and how cryptos are in terms of this market. We have digital currencies, the idea of it popping up in every single country in the world now, leading fiat country. Europe just came out. China already came out. All of them saying, nope, they'll still peg it to the dollar, but they're going to happen. So we've sort of solidified it. Okay, now we have a baseline. What do you usually do when you have something that finally happened after you speculated on it for a long time? You sell it. You sell the news, right? That idea. There's more to it than that. It's more to it than that. And putting this inflation idea in there, you can actually feel some of it. I think if you just look at it through that lens of, okay, if we think that Bitcoin's rising because of the inflation trade, which if you, again, doesn't need to be absolute, but if we look at it as this inflationary trade from the reinflation trade and then into growth, and then understanding that where this is, what are you trying to do? You're trying to converge all the markets together, are you not? You're trying to have everything trade at the same, you want everything connected, first of all, right? Everything is connected. So everything must converge, right? There's only so much supply and demand. And so the demand needs to be consistent. What is the sort of the difference between some of these different markets? The equity market can continue to issue more supply. Bitcoin already has its supply, right? It's scheduled when it has forks, everything, the supply is constant. It's the same supply always, so the demand's always going to push the price up, right? So what's really going on here? We have price adjusting to inflation. So what we should be able to look at here is that if we look at this price action here and go put it in conjunction, I don't know what the best word to use is, in conjunction with the growth move that came after we understood that, okay, yields, inflation, this is what the numbers are, adjust for earnings, and then the growth move coming into here. If you put these all together, what do you get? Well, you get crypto, which is far exceeding the rest of the markets on in terms of a pace, in terms of catching up to this idea, taking profit, and it doesn't matter at the end of the day because it now converged and that's it. That's it. That was it. It's literally just price convergence, supply and demand. Supply and demand, and it's why? Because it's on a fucking weekend. And it's what happens on the weekend? Well, there's less volume, and it's going to be driven by what? It's just driven by those that are basically in charge of supply and demand across the market. And we get this move here. You can tell because the rest of the market doesn't care, and the market here doesn't care either. And it's just back to normal when the day just starts here, right? We're about to open up U.S. exchanges. Everything's back to normal here, as if it doesn't really matter. And again, it never really matters on here anyway. But if we just put it into perspective, prices need to converge, and this is where things get a little weird over here, right? Because this is what I've talked about. Is I have an expectation that we're actually just going to keep trend here, which is not contrarian. Everyone just expects market to go, but not in the sense that you'll just keep trending. People expect swings back and forth, right? And expect earnings to be volatile. But if we're at the equilibrium in terms of our supply and demand in the market, and we just have a constant flow, prices are just going to continue to increase, right? How do you get rid of the short-term volatility? And how do you maneuver? How do you get an equity market that trends? You get all the other markets to be choppy, and you have all of the volatility pushed to the other markets. If you remember a quote I said a few weeks back, what is Powell and the Fed trying to do? They're trying to remove volatility from the equity market and put it into the bond market. They're allowing to sacrifice volatility on the bond side with yields, right? Yields have been up and down sporadically for a few months now. Yield just up and down. And so if you look at the volatility gauge on bonds, it's all over the place. But if you look at it on the equity side, what's happening? It's basically a succubus. There's nothing here. It's getting sucked out. There is no volatility here. And so what's happening is we have the Fed, central bank, is pulling volatility out of the equity market, putting it basically not, you can look at it as pulling it, but they're allowing it to be within the bond market because they control the bond market. They can add liquidity, remove liquidity however they want to. So by having the volatility just in the bond market, the equity market can be smooth sailing, right? And that's where we are right now. This also is it's the same concept when we look. Volatility is constantly being pushed out of the equity market into other markets, and those are just basically calibrating to best suit the equity market because everyone wants to be a part of the equity market. And so we're in a state here where the equity market is basically our main market, and that's the main market of the world. Everyone wants to be a part of the equity market. And what's happening is everything else is moving based on that supply and demand, and based on how much flow is going to be getting into the market, speculation wise, how much flow is possible. And then based on this inflation idea, everything else will catch up or pull back itself based on the equity market to best suit the equity market. Because why? Because everyone is a player in the equity market, and not everyone's a player in all the other markets, and it doesn't necessarily want to be. And so how does the bond market change? By the Fed. How does the crypto market change? By the people that are in the equity market that want to basically remove short-term vol from equities and put it into cryptos. I think it's a pretty good way to look at things. It doesn't need to be absolute, but it can keep us level-headed because, again, it gets very difficult over here. And this is where what I would say is, again, we can have this idea that the equity market will continue to trend here, and there's no reason why other than just saying, obviously, it's going to pull back. Sure, that doesn't help us trade, does it? The thing to say here is for those of you that, again, over the last couple of weeks, what we've been doing is we're basically trimming the hedges, right? We're removing those shitty positions that they're all short term. You're basically, you just have a bunch of bets, and by playing a bunch of bets, you'll catch enough of them that it makes you profit, right? And in income, we've trimmed those off and gone more long term, right? And so, again, I've said this so many times now, but if you're still in those positions and you're still trying to capture risk right now, you need to realize that we don't have the volatility to sustain that. We don't have volatility coming back and forth in indecision that will lead to breakouts that we can capture. When you're on a trend like this, it can get very boring if you're, I guess you don't like making money, but also in the sense that if you're trying to make moves every single day and try to swing everywhere, you're going to end up losing money because you're trying to produce volatility when it's not there. So it's very important that if you have not already done so, you have to remove those bad positions that you have, and you know the ones I'm talking about that are just, they're not going to happen. They're just not going to happen, and you've been sitting on them and you think they're going to happen, or maybe you're still looking at a ticker and it's down in the middle of nowhere and it's just been going down and down, and you keep trying to catch it and it's not working. You keep hitting your head. You have to stop and you have to remove those and just let your money ride through this market. And when a pullback does start, guess what? We'll be in positions that we can just get out of really smoothly. It's not a big deal, right? In the best case scenario is that we can hold through the pullback, right? That's really what we want with long-term positions is to have a long-term position that we can hold through, because guess what? In a year from now, the equity market's going to be up. In 5 years from now, the equity market's really going to be up. Apple's probably going to be a $50 trillion company in like 20 years or some shit, right? Bezos will be a trillionaire. Like, these things are just going to happen. The market will just continue to go. There'll be swings along the way, but we're really getting into a part right here where you just need to be ready for that. And again, this is where, we can have a great strategy and method in one period of time, but if you're not able to adapt and trade things how they come, and you're trying to make something else happen, like you can say, well, I did so well in here and I made so many cool trades. Yeah, so did I. But if you try to trade like that here, then none of that mattered, because you're going to lose all that and give it all back, right? You want a portfolio, and again, it is hard to go from one style of trading where you can be up to, making 100 trades, and I talk about making 100% on 30% of those trades. That style, it's still the same here, but you have to realize that portfolio word needs to start coming in. And this is where you get in. We're not talking long-term investing. You can do that. There's nothing wrong with long-term investing. But, again, if we're trying to generate income and we want to be better, you have to continue with these methods, but you need to realize your expectations need to change. And that's why hopefully everything I've said over the last couple of weeks has helped prepare. It's one thing, again, it's not I want to make sure it's clear. It's one thing that we understood that this move was happening, we planned for it, right? It's not like, oh, look, I'm right. I told you this was going to happen. That's, again, this is happening because everyone's doing the same thing. So maybe not in the start, but everyone's doing the same thing here. So the thing is that, again, everyone's doing the same here. You just have to you have to bring back your expectations a little bit in terms of percent moves. You can definitely get more money involved, and this is where that long-term play helps a bit, where you can get more money involved, and you don't need to be, you know, every couple days you're kind of, you're wondering why you don't have enough money into the market. These things kind of add up, and again, I've talked about every day that you don't have money in the market is it does equal a lot, and that's where when people that have been very successful, they talk so much about hating to lose, right? Because any money you lose, it really eats into that number to be able to just compound year to year, right? And so again, this is a time where, as long as you're just a part of anything in the risk market of equities, then you've been doing very well. But again, just you've been doing very well right now. And some of you that haven't done well, you're going to get chances, and maybe this is a chance to do better than you did before. But if we just take it from, if we look at equities in general, remove all of us from it. If we just look at equities in general, equities have done very well, right? Have done very well. It's really important. It's just really important to realize that no matter what happens here, things things are always changing, even if they look the same, right? And so the market is going to adapt around what's happening here, and the market doesn't know either, right? And so as the market continues here, it's very easy for a trend to get going, and then for us to all of a sudden be asking a lot of questions that frankly may not be helpful, right? And there might be things that we've done before in here that are just not the same up here, because again, now the question is, well, when will it stop? Is this going to be the top here? And maybe Bitcoin's leading us down, and these kind of things. And then earnings, right? You're going to get earnings here. The best thing to do here is not to try to create stories, because the reality is there is no story here. That's what makes it hard, and that's what makes earnings very difficult here. The only earnings that really mattered were the banks to start. You're going to have a lot of things that come out here, and the stories don't matter. The only thing that matters is price. And you know what really sucks is you make a bunch of stories, you find a bunch of headlines, and you think you've got it all figured out, and then price just keeps going, and trading really flat, or really just, on a trend and slow. And in a few months from now, it's up 10% on the S&P, and you feel like a dumbass because you spent all that time looking through Wall Street Journal articles, random automated AI generated Bloomberg and Market Watch, and all these different articles, right? And none of it mattered. And people trying to predict earnings, and then they get, again, we talk about how there's no volatility, and then somehow something gaps down 10% based on earnings, even though they blew earnings out of the water, right? Trying to get those things are never going to happen. The thing here, again, if you just change your perspective right now, and you change up how you're going to capture moves, and maybe you even put some rules and restrictions. It's a good time where, again, my rules keep me in line so that I'm not losing too much money. I may not make as much money, but I'm already being pretty risky. If we now get even less risky and really put some tight rules on us, maybe don't make a trade unless you're going to hold it for a week, right? That kind of decision, really might stop you from making some of those trades where you're not really sure if it's really going to make a move. Maybe you only make trades on Mondays and you trade it through the week, right? Maybe you're only buying things if it lines up with a certain price level and goal that you have in terms of where it is, and maybe you're going to enter things on a different way. Maybe you're going to be buying shares and splitting that with more risky options, and trying to get like a bit of an even ground to maybe keep some of the style that we've been on, and you're trying to buy not so much pullback support now, but maybe you're trying to, as the price is pushing up, you're buying shares and buying options that are a little bit riskier in, those even out a little bit, right? These different type of things that maybe you need to do. It might be a good time to screw around with that a little bit here and to feel it. And I'll be a little bit more specific this week, most likely. But I do want us just to be more macro focused and slow down. It's definitely about slowing down. You don't need to make a decision in 30 seconds. Like, speed doesn't matter right now, right? It's not like you need to be hotkeyed out of your mind making hundreds of trades and trying to be like really quick and, I'm going to get the perfect fill here. That shit doesn't matter right now, okay? It really doesn't matter. You can be 30 minutes late. It doesn't really matter. What's 1%, right? These things don't really matter right now. It's just about being in the right place, right? It's about being in the right state of mind and pushing through things. And there's going to be things that come at us that what we want to be doing here is we want to just be open-minded, an open slate. What a lot of people will do here and what amateurs will do is that they think they have the right idea and they've got it all figured out. And what will happen is through that bias and the way they're looking at things, and it's obviously you could be like, well, Don, don't you think the market is just going to keep going up? And don't let that affect my ability to be open-minded to look at things. So what I'm saying is if amateurs and other people that will lose money in this market, they'll think they have something, and so they'll make trades that force that idea. We don't force anything here. The price, whatever the price is going to give us, we're just going to trade with, and we're going to roll with it, right? We don't care if what the company is or how the price has been doing, right? Or what it might possibly be doing based on other people's ideas. We're just going to let it come to us, and we're going to trade it. And the thing to remember here, okay, what's really important here, okay, we have earnings and everything still coming here, right? What we're trying to do here is we're not trying to guess the value of a company, right? So we're not fundamentally trading. Even when earnings come, we understand they matter. Even if someone else is making a fundamental trade, and it's so important to realize this, and I know we've been on the same screen, but there's nothing to look at. When people are making fundamental trades, right, and they're saying, you know what, I think Boeing is going to be worth, $300 billion here, and based on this and that, or Apple's going to get another $1 trillion because of this and that. No matter what they think in terms of fundamentals, at the end of the day, they still have to go and place a trade. They have to go place a trade. And so whether they think something's going to happen in years from now or not, they have to go buy, or they need to sell based on that idea. How are they going to make that decision to buy and sell? Well, they're going to care about price, aren't they? They're going to care about how the price is moving, right? These things are going to matter if they're buying a position based on fundamentals, technical, whatever it is, right? And so all of us, institution, people, AI, whoever's making the trade, no matter what the reason is for why we're doing it, we all make this decision in a very similar way, right? If the price is going straight down, we're not going to buy it. We're going to wait for it to turn around and maybe even out. Maybe there's a support level. Maybe there's a level that we all agree is $50 and we're all going to buy at 50. So at the end of the day, no matter what the reason is for buying or selling, you're still in that moment going to find the best way to make that trade, right? Whether you're going to hold it for 10 years or not, you're going to find the best way to make that trade. That mentality of trying to say, you know what, I want to get that 10% lower, I want to get that 5% lower, or I'm not going to buy it until it gets 5% higher to confirm it. That idea and that mentality is all of us. And that's what makes price here. So that's where it's important to realize that all the pricing you see is, again, it doesn't matter what the reason is for why they're doing it. We're still making the decision in the same way because we're trying to trade and make the best trade possible. So again, remember that here because it's really easy and it is true that we're all making trades for different reasons. But at the end of the day, we only can buy and sell, and we're all going to make that trade in the same way. Some of us will be faster. Some of us will be slower. It doesn't matter. All we can do, all of us here, the only way we can make money and where our alpha is operating in that space that's just trading. It's just about the trading part. We can't make money off of what we think the value of something is going to be, if we think price is going to do something or not. We make the money in the small area where people are trading, and that's everything in price. That's it. So when we try to capture a move based on when we think other people are buying and we try to capture that, right? We don't care why it's happening or what the reason is. Obviously, those macro ideas are generating that idea, and that's how we try to capture other people's move. But at the end of the day, the money is made based on all of the trades, not the fundamental idea. It's those macro and fundamental ideas that shape the market in the biases, right? And that's what we try to understand. But at the end of the day, we're all just trading, right? And we can only make trades in really one way, because otherwise you're just kind of losing money all the time, right? So keep that in mind here, because again, there are a lot of reasons why people are making trades here, and whether it's a reinflation trade or whatever it is, right? Those things are true. We're just all trading, man. That's it. We're just traders. No matter what, whether you're investing or not, you're still going to try to make the best trade possible. That creates things that we can see in the market and understand, right? And that's all we do. And so again, I know we talked a lot about big ideas, but at the end of the day, what we got, we're trading. Let's see what we get here. I didn't talk about anything individual because again, most of the charts and we need to see. And I think there's too many things up in the air in terms of about starting on a Monday that again, it's about week to week now. We're a little bit larger, bigger focus, trying to take it all in here. We did have quite a bit of pre-market action on some of the charts that I just posted. We'll see how those things go. Again, energy, and then possible bounce back by clean energy. We'll see what that looks like. Again, that's such a hard thing to gauge. Hasn't been doing very well. Things like CSIC. I was going to repost the diamond from CSIQ, but it wasn't really necessary. We already have that chart from 2 weeks ago or so. It's basically, if you look at that chart, you just extend those diamond lines, and you can see the breakout just happened again on Friday. The same target and everything else. So not a big change, but it looks decent enough from here. Again, what I think a lot of the market's going to do, and here's another concept that's one of the hardest things to wrap, like all of us, for wrapping our heads around, is that everyone's already bought everything, right? It's like that one of my favorite Kobe Bryant quotes is that LeBron had finally started selling more jerseys than Kobe had. And so they told Kobe in an interview, they're like, Kobe, LeBron's selling more jerseys than you. And then Kobe was like, that's because everyone's already bought my jersey. Everyone already bought my jersey. I mean, the reality is here's that everyone's already bought everything, right? And so a lot of the question now comes in, and this is where the inflation idea, and then some of this being able to leverage and find money. There's a lot of cash out there, right? But there's usually there's a purpose for that. And so like we saw banks take off reserves. There's only so much money, right? How do we continue demand to come through? A lot of the times, healthy price movement, you get pullbacks, and then allows for another big move to come in here. Again, trying to gauge how less demand can push the market up because of less supply as well is going to be an important thing here. And again, it's going to take days and days to figure that out. And so when we see different price moves that happen intraday, again, I'm going to keep things on 15-minute candles from now on, because 5-minute is not going to helpful. It's not going to be helpful. It's important to remember that there is a difference from today and from, I would say, a few months ago, or maybe even just a couple months ago, because everyone's kind of already bought everything. We are running on less demand, but again, it's on this all-time high dance, and on a market that doesn't have many sellers because of a belief of inflation, prices will appreciate, and a belief that the dollar, because of that, will keep pushing down. Money supply will continue to increase. I think there's definitely a lag in terms of money supply with inflation and appreciation in the equity market still. Again, that money supply chart is disgusting to look at. So, when you look at it, I mean, the end of the day, just throwing your money into the equity market and you wake up 5 years from now, you're going to be up a lot of fucking money, right? It's just that not everyone has money to do that, right? Some of you are still fucking struggling. Need my stimmy checks, they say. Well, that's kind of the purpose of what we do here. We're trying to make income. Not anyone can go invest their money. Everyone's been doing that for fucking ever. But we have pensions for, right? 401k, 401k out of my mind. That's why we're trying to do something a little different. But it's such a bad excuse to be like, well, it doesn't matter if it pulls back because in 10 years it'll be up. Like, that's a terrible way to look at things because, yeah, you know what I'm saying. But it's still, it's such an important thing to still put into consideration because, again, that money isn't going anywhere. That big money isn't going anywhere. No one's taking out long positions. And nothing you've seen since COVID started, February 2020, there's been no exiting of long positions. Nothing you saw there was an exit of long positions. Those are all short-term moves based on different price convergences and uh, on things that are based on other markets and based on flows, right? No one actually bought equities and then sold that long position from pensions, mutual funds, nothing at all. So it's important to keep that in mind, and because again, I think the next pullback is going to be the one that really throws people off, and that's why I want to keep us really consistent on this trend and have us in a position that can just keep going. Because again, if 3 months from now you haven't been in a long position and the prices are up, you're going to be like, well, that was really silly. I could have just done that anyway instead of losing money making short-term trades. DQ doing very well. Again, it is about the individual trades, but yeah, not the easiest thing to capture. Gapped here. Some of these ideas, again, they're very value based. Very value based. It's really important to realize that the value trade is. It's so sneaky. It really is sneaky because again, we got involved with growth. We'll see if Netflix breaks through here. Again, we've been trying to break through here quite a bit here. But the growth move again is just coming out of its low, and so it got going very quickly. But now it's back up to where value is. The value trade's not going anywhere. The growth trade is the one that's going to react and will make the one that's going to hurt people, like I've talked about. So again, be careful where you're positioned because one of these things is not built like the other. So it's pretty clear. Every time you look at one of these charts that's just coming onto a trend, there's just a value chart. It's only the growth charts that are all over the place. So, what are you gonna do? Yeah, the hog move. I don't know if I'm. uh, Definitely some windbreakers in the chat. Taking the trade over here, and then when we brought it back up over here, pretty suspect. That's for sure. I'd like to know who knew about that one. Let me you know what, I'm gonna just because so many people are gonna wonder. Yeah, here's your earnings, your little earnings bubble. Your earnings bubble. Yep, hog had earnings. Who would have thought? X doing well, of course. We continue to push that trade. Talked a little bit about that. This is a weird. This is gonna be a Stranger Thing concept as well. Is that some of these value plays again, industrial plays, the earnings. It's not the earnings this time that matters. It's for next. It's for really next year, and so it's hard to. It's all gonna be about guidance. And so this is where people usually fall into the trap of, well, they beat earnings. Why is this price down so much? It's all about guidance, right? And so when we get earnings that come out and then they say, okay, here's what we made this quarter. Everyone goes, I don't care what you made this quarter. How are you going to do next year? And then that information comes out and they go, oh, we don't have any guidance, or oh, it's probably not going to be as good because we did really well this time. It's important on some of these uh some of these tickers that and stocks that are based on government funding. A lot of these the earnings literally mean nothing. And so, because none of these things have happened yet. And so, this is where that some of that weird price action comes in, where earnings will just bring more volume, and that volume is just going to go to the side that should be speculated on. So things like X here. What's the speculation here? Well, it's speculated that there's going to be a bunch of building by the U.S. government, and they're going to be giving out contracts, and things like X steel is going to be needed, and the price is going to go up, right? Speculated to the upside. So what's going to happen here with price? Well, we know it's just going to appreciate. it's it's like so well known that it does make some of the price action very strange when we look at it. And I've talked about some of the moves that have happened. No one cares about the earnings right now. And again, no one cares for basically any earnings besides banks, because we want to see the bank reserves and everything like that, right? So again, some of these things, the earnings still matter in the sense that it'll bring more volume. It's trying to figure out which side of the equation is that volume going on, right? And a lot of the times, it's a lot simpler than uh, it looks. Like most of the time, you're creating a story of why it would be possible that different things can happen, but most of the time, it has only one option. There's only one option. Peloton coming off the low here. This gap down quite a bit. Again, we've talked a little bit about some of this price action on the growth side. Not very good, is it? So we've really removed ourselves from some of these trades that are very short term vol when we're not in that environment. You don't have to put yourself in those situations. Again, we've sort of changed. This concept has changed very quickly, but definitely the truth. Yeah, I saw that too. Yeah, the Peloton news thing from the treadmill or whatever. I really have no clue. I'm sure there's news traders that are trading that. It's definitely possible, but again, I think really the story is that we already saw that price was really making some very negative moves on that side with COVID winners, and we talked about that quite a bit because we were part of that trade. But as soon as you get that trading, let me just put it in perspective. Market's kind of trading flat to start. This kind of trading here, right? This is so much short-term volatility. This sort of price action like this, that this trade here, when we take it with the rest of growth, is fine. But as soon as this starts to happen, in comparatively to the Nasdaq, just making this move, then you already know you're sitting on a landmine, right? You're sitting in a situation where this could either be getting bought a ton or it could be getting sold a ton, and you don't know the difference between the two. And that's the worst position to be in right now, is not knowing really what someone else is going to do, because right now that's not how the market's trading. Right now the market's trading in such a way that there's only really one way. And if it goes the other way, we're all going to fucking know it. It's going to be very easy to tell that the market's not going this way, right? Whatever you want to draw for a line here, you don't need to make it perfect. Draw a random line through here. If it doesn't look like it's on that line anymore, then there's probably something else happening, right? It's gonna be clear as day. And so that's why people start losing. You can be anxious, but people stop getting scared. People really do stop getting scared, because you'll know if there's actual selling in the market. And this is where the playing chicken part comes. If none of us sell, the price will keep going up. That's literally the Wall Street Bets motto, right? The GME motto. If we don't sell, the price will keep going up. That's what the market's been doing for fucking thousands of years, is it not? If the price of gold's been going up for centuries, yeah, if you don't do nothing, it'll just keep going up, right? And that's just the reality. So, we'll see. We'll see. This is our 15-minute candle. We're coming out of it. 44 basis points. Not the widest spread, but definitely more than expected. If we put it into perspective here, probably more than to be expected. Probably we can shape it up to the gap down. And again, there's some moves on things like Peloton. I think that's warranted enough. If we look at the Dow, the dirty Dow, it's in the same spot over here, gap down. Again, it's just sort of, it's in the exact same spot. The Dow made the biggest moves on Friday, which again, this is the most consistent play in really the sneakiest of trades. That it's so it really comes from the way we looked at it through the lens of trading it from here and understanding on a different level sort of the trade here, because now you don't so much want to get into the Dow, you'd rather get into things like the Nasdaq. It just promises more. And so it does make things shifty over here, because the Dow did the best on Friday again. This is just doing better. It's weird. It's weird to put that into perspective, and yeah, it's just not as risky. You may not make as many points, but if I want a portfolio that can last 100 years, I'd probably put it in the Dow. So at the end of the day, to each his own. Nice slow start. Nice slow start. Letting us digest a little bit. Nothing stands out, which is nice. I don't want surprises, and again, a good confirmation would be less surprises. Maybe not no surprises, but less surprises. Would definitely be confirmation of a more stable idea. I think this is a pretty good start. Good start to continuing the trend. Again, we didn't gap down or something. We just opened a little bit lower. So opened a little bit lower. A lot of our individual positions doing pretty decent. The travel move, again, very sneaky. Very sneaky. And some of the charts I posted, if you didn't get to take a look at some of them, some of you should probably be questioning whether or not you really think that's realistic or not, like CCL. And there's some charts in there that have some pretty silly ideas, but again, just planning. I do foresee some interesting moves to come through. This kind of move here, again, if you didn't look at that chart and you don't, these are the kind of trades that even with the mentality that we have now, you can still get a part of this move, and you're talking about quite a bit of points, right? You're talking about a lot of points. And so again, even though we understand that, okay, the market's probably going to be slower, there's still going to be chances out there for you to be making some moves. And this would definitely be for those of you with smaller accounts. You still obviously, you're in a situation where you're under 25K trading. You look at the long-term idea and you're like, 25%, 30% a year is not going to do it for me. And there's no point. I'd rather just save the money and use it for something else. Like, I might as well not even be here trading. So you'd want to be a part of some of these moves that they promise more, they risk more, but they don't offer a risk where you're going to lose all your money, right? Losing your loss is get stopped out and you wasted time. Not like putting your money at a roulette table, right? See, some of those ideas are interesting. I think it's really cute, actually. I think a pretty good list, a pretty damn good list, I'll say. In terms of this market, it's gonna be very hard to find concepts and technical ideas that are things that people have not found, or at least are not part of. So I would say this is a pretty damn good start in terms of this week's list. The UNG chart I was gonna post multiple times, and I've been talking about it enough that I didn't post it. I was gonna post it over here, the same chart, but I just finally posted it. It was actually back here. I was gonna post it with this line here. It's fine. I mean, in terms of this trade, these are slow trades, but just keep in mind sort of where we are in terms of the energy market, oil market, and what's sort of happening. In that we shorted this, right? We shorted natural gas. The long idea here, keep in mind the connotations that economics have in here. It's again, it's not so much that the price is going to actually increase for natural gas. It's really where it is in terms of the price move. Again, this is probably going to keep coming down, but again, we can understand that these moves, you'll get higher local highs and then reaching lower lows again. So Whether this actually breaks through and continues or not is certainly up for debate. The fizz move, if anyone remembers this whole nonsense over here, we had a fun time with that. If anyone remembers this trade over here. How many points was that again? Over 100% on the underlying. Yikes. That was an interesting trade. See here. Yields rising. There are no economic events this week for the U.S. We do have European meetings going on this week. And it's hard to put it into. I mean, I guess I'll just talk about the things I want to talk about. So, there are some things going on with European bonds that, if anyone doesn't know, Germany is basically the biggest swinging dick of Europe, right? Everyone knows that, obviously. So Germany is the big swinging dick of Europe, and they're basically just like the U.S. is the treasury market for the world. Germany is the bond market for all of Europe, right? There literally isn't even a comparison. Like, it's not even close. They basically they are the debt market for the entire all of Europe. So anytime Greece needs money, Germany gives them money, right? These things will be happening for another 100 years again, right? And right now, though, there's this push to get European bonds, so EU bonds, to be a little bit more like, can we do something here? Because again, they have been copying the Fed in terms of monetary policy and trying to, again, they're providing liquidity and everything. But the problem here again is this: Germany is sort of, it's a part of Europe, yeah, but they kind of just dominate the whole thing, and it's just not the same as having one body cover multiple countries. And so again, the economic outlook there is that Germany just keeps doing better and better, and obviously that's not entirely true in like right now, and I don't know specifically, and I just know from the numbers that obviously there's things that they're just not doing as well right now, but there's expectations. Obviously they're still the biggest economic power, and these things are not going away. And so beyond taking politics and everything else that's been happening there since the Arab Spring and everything else, I mean, there's certainly a chance still that if they can get everyone on the same page, and the idea of the European Union itself, you are talking about a population that's bigger than the United States by like 100 million. And you're talking about many different countries and cultures that are all good at different things. At the end of the day, the biggest sort of, I would say, not like mistake, there's probably not a good word for it, but in terms of, if you think about it just from the point of view of European Union altogether, and maybe if we just keep Britain into the idea in the picture, besides Brexit already happening, is that there's no reason why they shouldn't have been a bigger economic power than the United States. There's almost zero reason why the EU should not be a bigger economic power than the United States. It's actually, I mean, at the end, there really shouldn't even be close. Like, it shouldn't really be that close. Besides, like, some obviously technological and different sort of military things, fine. That's fine. But in terms of actual economic power and the ability to shape things, the only thing they don't have is the dollar, right? The US dollar, and we already sort of understand that the US dollar it doesn't really so much matter what the currency is at the end of the day. There are a lot of reasons why with that we can sort of just produce as much as we fucking want, right? And we've already learned very recently that fuck inflation will just keep printing money and spending money on everything, but that's where the EU can be as well, and so they should be able to do that as well, and they should be able to do it better. They should actually be able to do it a little bit better. And so if they can get into a situation again where they can get everything booming and getting possibly their markets, I don't know if they really need stock market, and that's where the bond market comes in. If they can get the bond market to really produce value uh, stronger than ours does in some sort of way, and it's definitely possible. Then again, you're talking about Europe is going to be a big player. They're really not right now, and so uh, there's still, I think, some ideas out there that, depending on how sort of things change right now, it's definitely a big bet to putting on. And again, I've posted some different charts that are related to, we've had emerging market discussions and I went from China, but Europe is definitely a place to be. I wouldn't bet against it. They are the you can go to Europe and walk on a road that's been there for 1,500 years, so bridge that's been there for 1,000 years. People's been there for fucking ever. I mean, we'll see. But again, these things are happening now. I'm interested, and they do matter because there should be some sort of focus to bet on Europe and what this looks like. Again, it does affect markets, just like the China has affected markets over the last 30 years, right? It's big fucking change, things that have been happening. And I think we've gotten desensitized to how bad Europe's handled COVID and how things are so fucked up there in terms of that. And I think definitely, the last 10 years with everything that's happened with, uh, you know, politics, immigration problems, and some weird things related to that, we've lost touch with what the reality is, and that they're fucking bigger. So they're just not well coordinated right now. That's all. Give them a chance. Very slow to start here. Slow to start. DQ doing very well. HMHC. This is a chart that we've traded quite a bit. We've traded quite a bit in the past. It's been very bullish coming from COVID. Cute chart. There are a few things to note about some things like this, and maybe I should mention because the market's a little slower here. This idea, I think it is a little confusing because I do this every now and then. This idea here, let me see if I can give a better example. Put it into conjunction. Just give me a second here. DRI, I can use DRI as example. Okay, so if you look at this chart here, okay, I call this a bottom triangle, right? So this is a bottom triangle. You get a downtrend here into basically this idea that price took off out of this low, and this was the lowest point, and the market really rallied off this, tightened, consolidated, broke back out. But this downtrend idea here, right? Well, isn't it just a uptrend here? It continued, and then you consolidated here, right? Is that not what happened? And what you can then do is say, well, isn't this just a diamond then? You've got, this is the right part of the diamond, and then this is a continuation diamond, right? And you just put this through here, and then put the diamond here, right? Is it not? Oh yeah, you could technically do that. Like, let me bring out my little yellow line here. Draw this here. Yeah, you got like you could do it, right? You could certainly do it in terms of, it wouldn't be as pretty, but the idea stands, right? That you get lower lows, higher highs. And if you look, so this is again, bottom triangle. Well, if you look at DRI, that's exactly what I did here. But look, you could do the same thing. This could be the downtrend. This could be a bottom triangle as well. Here's the triangle, and then this could be the downtrend, right? And so there's there's two differences here in terms of how the price action would work, right? This would be a lot slower, right? This would be a lot slower coming out of here. And what would happen is what I'm trying to project here, and the idea is that if it's a continuation here, then it's going to be a continuation of the same move, which means supply has not changed, which are these lines here, right? The idea here is that this channel and this velocity will stay the same. Things are not going to change. They'll continue this channel. It was consolidating and, made some moves, and now it's going to continue this move, and we basically see that here, right? This idea here is that this trend that this was on, yeah, you could have done the same thing as that DRI chart and just go throw a trend in here and let's just bullshit it and say maybe this, and let's say this here. This is pretty close, right? This is pretty close. I would say this would be the channel here, and then I'd put the diamond in here and say, okay, it's going to continue. Except that's not this, as much as it's true that those lines are here, right? Yes, you could draw those lines and say that's exactly what it is. Fine. And you can put the diamond here. The reality is, though, is that that supply is changing, is it not? The supply is changing and it's going to remove itself from there. And this is going to be a different velocity. And so this is where you have to get a little abstract. And that's what I think I do best. Get a little abstract and think of an idea that this is shifted. There's a big shift that's happened in the recent form here, that it's not going to continue the move. It's not going to continue the move it's been on. It's actually a lot more violent. It's actually really shifted supply it's actually shifted its angle. And this doesn't really often happen, and that's how we can make money, is that we make alpha, is we make alpha off of the trading involved. Not what we think the value is going to be or why we're all making a trade, but we all have to make the trade. We still have to enter it. And what's going to happen here is it's getting sharper, right? It's not this line, it's this line. It's this line. And it's going to really push the supply up into a different area. What happens over here? Well, it's $10. What happens at $10? Things get a little bit more interesting. Now it's $10. And again, you get into an area where options get a little bit more fruitful. And if you take a look in terms of price action here, what again starts to happen from here is you completely change your supply. And so again, this is the difference between, if you look at the DRI chart where this price action is here, this is the fucking trend line of every chart, right? It's the same angle of every chart. This here is trying to get out of basically a low, and so that's where this bottom idea comes in. And that's why I specifically use the bottom word for when I use like head and shoulders bottom. I don't say inverted head and shoulder. I'd say bottom because it's about being a bottom and what it means coming out of a bottom, right? Coming out of a low, right? What you've sort of created. It's really hard to look at this chart and go, oh yeah, that makes sense. How we just randomly decided that it's not so much that, right? It's about, we're talking about this idea of changing supply completely, right? And so that's sort of the idea here. And I've put this concept in other charts, but it's something important to put into perspective a little bit. Is it's really hard to look at. I know it's really hard for people to, to look at this and be like, oh yeah, there's something there. And the lines don't specifically help because then you just take it for granted. Like I know, like I realize that you could, again, you can make up a lot of ideas, but it's important to realize why things are happening the way they are, and they're just happening because this is just people trading. And again, no matter what the reason is, we have to still enter and exit within the same price. Like it does not, it doesn't matter what your reason is, we still have to do it. And so that gets put into price action, and that we can usually, not usually, but that sometimes will stand out and we go, okay, that I think I can understand what exactly is happening here. And so there is a difference between me saying some sort of consolidation on like continuing the same thing. I would say this is something new. That's the difference between continuation or not, right? UNG is coming through. The rest of our lists, taking a look. RFP has continued. Again, our industrial, our value side continue to do well. There's really not much to say. A lot of these charts, again, are looking very much the same. There's not, I don't want to beat a dead horse there. Again, things that are green continue to be green on the value side. There's really not much volatility. VMW has been doing very well here. We'll see if Expedia, we'll see if the travel move actually happens again. That's definitely the one take with a grain of salt. Might get, I mean, someone could come and hurt me from my CCL chart, that's for sure. You do like to see this Amazon move here comparatively, certainly. I think it's important when we think about the market. Let's see what we get for price action here. I think it's important that the market has that. The Apple candle as well. Again, Apple and Amazon are two charts that are at their lowest comparatively. This very strong trend here, no matter what's happening right now, is definitely important. Let's see what we get here. Not sure what the best way for a ratio for you guys. Put that there. You get our first test of some intraday volatility here today. And it's hard on the, I'll tell you what, it is hard on these NASDAQ candles. It's really difficult to look on an intraday, and I don't think that's helpful. And I don't think anyone's really looking too closely. But when you look at these candles like this, it does make things kind of, you can't really look at them. It doesn't really help with the gauge, and that's where if we put this on 5 minutes, it's not even, it's worse. Look at this. This doesn't really help, right? So intraday chart's not the best, right? Not right now. And that's where, again, you can tell the difference. You can tell the difference because this price is not connected because people aren't making decisions like that. People are not making very quick intraday decisions right now. That's not what's happening. If you have an idea to keep going long, you're either doing it immediately or you're waiting, and you're gonna wait for a price point. And that's what I mean by they're gonna be trading. They're fucking trading. It doesn't matter what your idea is, but this does make things difficult because you can't tell what. This is where it doesn't matter what's happening so much right here, but if you are trying to make a trade, it's very difficult. I mean, how do you make a trade right here? Difficult. Fucking hard. Why you just want to be in position, man? Like, yeah, this is for sure. This is definitely support right here. I mean, it looks like it, but you could definitely come into the trend line down here. I think when you put this into perspective, it's not easy to tell where you're creating a nice support right there, which again is very important. It's very important that these all-time high charts continue to establish a base of support, which is these candles here that you see, those candles that we saw on the S&P as well. This idea of trading like this, that's creating support. Those are creating levels so that you can continue to have support. And it's important to continue to do that. And that's why it gets so obvious if the price is going to pull back larger in a larger amount than before, which we might be able to see this candle here, for instance, right? Is that it just stands out as more, and then right? And then you go into the support that you created before, and you test that support and confirm it, and then you go, okay, that's for sure our support level here, right? I don't see anything on the mega caps. Tesla just doing its thing down there, but that doesn't so much matter. Very interesting. Thanks and energy basically break even so far. Let's take a look. Small cap is coming down into the trend line. This should be interesting. Definitely be interesting. Again, we understand this is definitely still a short-term ball here. A lot of the idea is that this should be able to get out because the banks. So still looking for that. Again, it's going to react violently to the market. Very interesting spread between charts that we are looking at and the market. Again, the idea of velocity here on some of the charts that we are trading, did not take into consideration the market whatsoever. So definitely something to keep in mind there. Yeah, that didn't do it. All right, so 0.5% on the S&P. Again, not many points. But again, this is the problem where we look at one intraday candle, and it's just a one intraday candle. This is where you push everything out in terms of timeline. Push everything out. You don't really take it all into this one moment, right? And again, what we're going to be trying to do here is based on some of the ideas that we have here and understanding. What we're trying to understand a little bit, what I'm trying to understand is when we do get moves that come down here, it may be all at once. Maybe like right here, we lose, whatever this is, like 30 basis points on the S&P in 15 minutes. Uh, this this sort of move, what we look for is where exactly that money's going, and that's like the Bitcoin thing, right? We see Bitcoin take some profit there. It's not those are people that want to take the profit, but they're going to put the money back in somewhere. They don't shove the cash under the mattress, right? There's that money's going to go somewhere. And that's what we try to look for, and we try to add the supply and demand up over time while still adjusting for inflation. And again, this is what institutions do. And we get CPI numbers, and they try to adjust for inflation. And you're trying to figure out exactly when the money exits, where exactly is it going, and why is it happening in that way, right? Price needs to be healthy and move all the time, of course. But it's going somewhere, right? Going somewhere. Going in the dollar? Is this all the money right here? Let me show you the dollar chart. Let me give you a look here. That's what the dollar chart looks like. It's selling a lot. I would say it's just we're getting reaction to literally just to the bond market right now. Probably be it. And it's just because look at the extra volatility in the dollar. And then again, you had yields spike a little bit. Now they're back down. That's it. Again, here's the thing, right? Is that you just have volatility in the other markets. Volatility is really not in the equity market, but you have the move still happen. But you just need to realize that when you see a move happening, it's not because of volatility. It's because of other markets, and you just have a flow happening. I would say you look at this candle here. This should really stand out when you look at this DXY chart. That should really stand out. And again, this right here is directly tied to things that are happening on the bond side, and this again that's volatility, and it does cause movement on the equity side. I think we don't really have a good way to get it, but to start the week off, right? We don't really have much, and that's a good sign of a trend. A good sign of a trend. We get some movement here, but yeah, not easy to look at the candles here. We are on the coin trade. Oh, quite some tightening over there, boys. Is that the move to the upside, or is it the downside move? Where's what is it? It's an arc F. It's probably the downside move based on the arc move, right? Again, this is interesting here. And this is what we've talked about since over here from the rejection, right? Is all these moves on the growth side that have short-term volatility that we can't be a part of. Things like I've talked about plug here, right? How you try to make the trade work from this tightening into the low, and then it keeps coming down. You can't do anything else, right? And you get into a situation where there's too much short-term vol here, and you can't. There's no timing because the market doesn't offer timing right now, right? When the market's just on a trend, you can't actually figure out timing that well. Now, this could be support right here, but you don't have a way to buy it and take off from there in the same way. And so those kind of things are definitely difficult on this side. Say this is definitely coming down to support here. This trade's again long termed. Long term. Where's the docu chart? Let's. So now what? So for the next for my next buying phase on some of these charts, so something like docu here, right? Of okay, how do you buy this right here? That's the timing I'm looking for right now. So some of these charts, what I'm looking for is where exactly is the timing to buy some of these other charts, right? Chewy, for example. Some of these charts again that I put on my sort of my second tier of things to buy and pick up that I do want to be a part of a long move, right? Things like Zoom, right? Do want to be a part of a long move. It's the timing part now that it's not going to be very good timing. Not going to be. It's going to have to line up with this trend here, right? And you have some very sneaky moves. Some very sneaky moves, I would say. Where's the net chart? Let's see. Like this here. This can be very sneaky, I think. So some of these, like the timing, I almost want to do some of the timing right now for long-term trades. Some of them, you're going to have to be patient and wait for the true support. Some of them, this net chart is kind of has support right here as well, 73.40. Things like EVs, again, you're in this weird spot where like Ford here, this is the support, but it could trade on the support for a week, 2 weeks. And this is again where when's the timing of the pull. Again, the equity market, it's going to be, if it's on a trend, it's still going to have days that it comes down. So how do you time the day that the market's down that you can buy some of these things on their own down days to go buy into a long term to get the best average? Again, it doesn't really matter at the end of the day, but it matters right now. And it will matter in the moment because you're not going to hold something that you're losing. So again, a lot of your trades right now, we can have an expectation that prices will be up next week and the week after that, right? But it's about those few days that coming after you bought something that you don't want to get pushed out of the trade and you don't want to be losing money. And so like if you take an F trade here, but it trades flat for 2 days, what's your options look like? Are you going to be down 20%? You're never going to hold through 20%. So you can't buy it then. And again, it depends on the options. Then when you try to look at, okay, if we push 3 months out, we buy 12. Okay, well then, but how much can you actually hold? And you look at price history and you look and you go, okay, well this lost like 10% over this week here. Okay, I could probably hold through that. Like some of these, some of it will just be like, okay, I just have to enter it then. There is no, because you don't know, and the price history will only tell you so much. At the end of the day, it only tells you so much. So it's like Ford here, I guess. I guess. And this is again where it comes down to opportunity cost. Okay, which one do you want to believe in? Which moves do you want to believe in more? You just throw all your money in the S&P, right? And you could just be up this whole time. So again, this is where it comes down to talent part will help a little bit in terms of timing when there is no timing in the market. There's no timing right now. I promise you. Timing's gone. You're kind of rough now. There's still timing, but you're much more rounded. Much more rough and rounded. Those are not the same thing, but in the sense that it's not so direct where it's like you're buying at a very an exact point, trying to be perfect. Right now, it's so blurry is the word. It's blurry. It's blurry where the entry and exit is. but you know you should be buying. That's the hard part, right? And so it dictates a lot of your. Some of you have always been buyers, but dictates a lot of your mentality when you look at those things. We're just buyers. But yeah, I do like where this, this Amazon chart, the high here, with this move, it still signifies a lot here. So this low here, like this is where when you look at the candle like this on the Amazon chart, you go like, okay, I have no problem with that, with my position. I mean, obviously you shouldn't have a problem with it, but if we're just trying to take in intraday moves, we go, okay. The CCL move here, travel move, again, you're just gonna have to don't don't believe his lies, right? You're telling me that CCL is gonna go up over 20%. It's gonna go up 25% in 1 week. That's what you're telling me. That's really what you're gonna tell me. That it's gonna go up 25% in 1 week. Okay. What if I told you that CCL went up 25% in 1 week 2 weeks ago? What if I told you that all kinds of tickers did that? Am I really that crazy? It just did it this week. This other week from here. It did the same thing. It actually did more than that, but it was 8 days. Did 30% in 8 days. So, I mean, is it really that wild? Let's be honest, right? And that's where you look at some of the growth tickers and you go, oh, that's no problem. Tesla did what, 20% in 1 day? It's what, a fucking $700 billion company? No problem. How much has Apple gone up? Gone up like 20%. No big deal. Sign me up. Brad Billy. Where are we on some of our aerospace? Let's see. See, these moves are not easy. Not easy. This is not easy at all. You you have to hold through a lot of this. You have to just buy in. You have to hold through some of these ideas. The question here on something like GE is how quickly does this catch up? And that's what I'm having a hard time understanding now, and that's why I've shifted so much to the long-term trades and not trying to trade for those short-term ideas on some of these charts, because you can make those trades, but again, you'll just get stopped out, or it doesn't happen, but you're taking the chance, right? But it's almost like so many of these trades, like you'd be taking chances on so many charts right now to capture short-term moves, but you don't have a good enough signal for which ones are going to be making a short-term move, so you have to just be long-term. So it's like I think some of these will still, like, I think this will get into its trend here, but you just don't know which ones are going to make it quicker. And so, like, do you put short-term trade on here? No, you just have to put long-term, and if it moves really quickly, then you'll capture it a bit still, right? You'll still be in the position. Just, it's hard to continue to bet like that right now. So I'm being pretty consistent across the board, I would say. Even in places where I think that, I mean, besides, like, obviously some of these charts that I've just posted, like, if it's a short-term play, it's a short-term play. What are you going to do, right? I mean, I'm not. Like, this move, probably to be expected. I mean, what do you expect here, I guess? Get 7% on Friday. I'm taking about half of it so far. I mean, what do I expect? This is where this is one of those really hard lessons here, is that All right, let's do it. Okay, here's the more on a chart. Okay, this chart already, people should already be like, dude, you're a little wild. This is almost 50%. This is 50% in over a month, 2 months. 50%. And we were breaking that trend. This would be the trend line, the velocity that we would need to get there. This was way, way above that trend, right? It's really hard to take this into context where this would have been the trend to get 50% in a month, 38 days. This is the trend line to get 50%. And this is the trend line that we've been on. And this is how fast price has been moving. We captured this trade, but it's really hard to be able to make a trade here and then hold through a minus 5% here. It's still on a higher trend than this trend here for 50%. And so this is one of those things here where you're not trading the chart, you're literally trading yourself. And this is where when I talk about when a price moves happen so quickly, you make a decision. Sometimes you make the decision to take profit because it's put points on so quickly that you know that you're not going to make a good decision the next time a price move comes. Because this here is still above the open of Friday morning. Friday open, it's still above right now by, what is that? It's still up by 2.5% from Friday open. But that's again, these type of things here, this is where if you already knew that you're doing long-term trades, you don't care about this move. I would imagine some of you, if you're in that trade, you probably already got the fuck out of that trade. you can't do that unless that was a part of your plan to capture short term. But that's hard. Like, it's just really hard to see something go down 5% and hold it. But you have to realize that look how far above it is. This would be the trend line again for 50%. And it's almost 7.5% from this 5% pullback above that trend. It's such a higher level of velocity than the fucking 50%. Like, where would this be going here if it continued on this trend for the same time frame? Let's see. For the same time frame, that would be, oh my god, 38. Okay, there's 38. Is that the trend? Yep. It looks like a perfect line right there. That would be 118% if it continued on the trendathon right now. Obviously, it's not going to do that, but that's the trend line it's been on for fucking a week and a half. And so this is where you have to be very desensitized to price moves, because look at the price move you're on right now. It's very difficult, very difficult. And again, that's where if you shift your focus, you can push through these ideas right now. And that's why I talk so much about the last week or so of these long-term ideas of it's these kind of things right here that will, it's you that's going to hurt yourself. You're going to exit a trade that you're doing brilliantly on. You took a brilliant trade, and then it's not that taking profit's bad. Take profit, but there are times when you will make mistakes because of that, and then you'll realize, like, even an hour later that you made a mistake. Right? An hour later, you'll realize you made a mistake by taking profit. Again, it's okay if you take profit because you made fucking money. That's what it's all about. And again, no one will ever criticize that, but for criticizing ourselves, you can always go back and criticize yourself for taking a decision that it was because of you. It wasn't because of price. It was because of you. Those are hard things to learn. Very hard. Again, that's not diamond hands memes or anything else. It just means that this price is up by so much and on such a sharp trend here that you can't take profit on this move. You would need to at least break this low before you even somehow thought about it, right? And that's just, again, following rules, not letting your own biasy shift the dynamic here. Anything stand out? We have some charts that continue. I mean, see GME. We're definitely getting some of our meme stocks getting going. GME, RAD. Again, supply and demand. There's more people that want to buy fucking GME. They're gonna buy it. Its price is gonna go up. It's gonna happen. Fucking A. See, the everything Archegos related is such a bad time for this to happen. It's such a bad time for this to happen because I would have loved to take advantage of these, but it's just so hard for me too with how I'm trading right now. These trades here, Discovery, Viacom, the VIPs. See, the VIPs chart is coming up. I think the TME move sort of beckons for some bid here. I would have loved to trade this more actively. Hard to look at the chart, but because it's doing the exact trend. It's doing the exact trend from before, but it's actually going downwards, which is so funny. So it's doing, like, talked about it from here, that wouldn't it be really interesting if we got the same trend from over here and it just got transposed over this way, right? And it just continued, but again, it would be very different still, but it would be basically the same trend. But we're actually getting it to the downside, which makes things it actually makes no sense at all, which makes it so much better. I mean, it's so much more interesting that somehow we're getting the same trend that we were on here, but it's to the downside. Who is still selling? Who has long positions that they're? The answer is no one. This was all a long position that gets sold, and so no one is selling long positions still. It's just the normal everyday trading, but it's going the other way. It's inverted because of this downside move. So like some of this trading in here, there's so many opportunities that I think that there's probably someone making a lot of money trading this shit over here. Just don't know how to do it with what I'm doing right now. I think it would require a little bit more time commitment and money than I'd be willing to do right now. I think there's a really big opportunity on that though, because again, that was a big fuck up. So, and it has nothing to do with the company. Or, like, literally, when I say company, I mean the company. It has literally nothing to do with any of those companies. The price has nothing to do with it. Maybe the price had nothing to do with the companies to begin with, right? Maybe we just pushed the price up for no fucking reason, but I mean, it's probably true about everything, but I'm taking profit. Still waiting on some signs from the China charts, but if we do want to take a look, Baba continues to sell from this move here. Again, the big gap up, it's still in a strong spot comparatively to the rest of the Chinese companies, so it does make it sort of the hot spot. JD continuing to get whacked here, but it's trading flat down here. We'll see what happens with these. Billy is basically the strongest trend chart that we have. Whether or not these are coming out of here, again, if we look at the Hang Seng, it's still continuing the trend. And so we do have the trend here, and the bid that came in is probably the most important part is, again, this big wick here. So again, there is there's something out there willing to bid price and some sort of expectation. So Chinese tickers are still in. Like, we're getting going. Everyone wake up now. Yeah, I woke up early today. Woke up about 5:30. Looks like everyone else woke up about 10 o'clock. Woke up 10 o'clock. What? Give me a sec. Whoops. See, trying to be cool for the kids, and my Instagram story never uploaded. Apparently, you can't close the app immediately after posting it. You have to let it upload. Rip. Just failed to upload. Don't close the app. My bad. My bad. My bad. Can't do it now. The sun's not shining on my window anymore. Fucking going up in the air. You can always tell it's getting later in the day. That blew my mind as a child. You could tell the time by looking at the sun. You can do that with stocks as well, you know, right? You can tell what time it is or what the price is by looking at it. Just looking at it. Really interesting. Like if we look at this right now, I can tell you that it's pretty early. Pretty early. And the price is down. But the price is right. Who wants to bet that the Dow is going to do the best today? Growth or value today? Dow or the NASDAQ? Which one's going to do the best? I would say the Dow. I would say the Dow all week again. Dow did the best last week. Dow did the best last week. Dow did the best last week. Really took off. S&P. Maybe S&P does the best this week. S&P did what? 1.4. Oh, the S&P technically did the best, but guess that's not the fair comparison. S&P kind of is both of them. Damn, really makes you think. S&P never fails. Oh, good. Well, we're doing pretty well on some of our small banks. Again, I expect this move to catch back up. I'm almost contemplating to pick up some IWM. Use TAN here as expected. All right, excuse me. Not what I meant. God, I'm fucking losing my mind. Let me show you here. TNA, TAN, same thing, right? TNA on support. Pick up my small caps, 3x. On support, it's 1037. Oof. Timing is so hard right now. Don't think you have to do it right now though. You probably wait. Again, I do want to make these plays here. I think it'd be a nice obviously using TNA as the leverage 3x. You're not looking to make as long term of a situation. What you'll do is if you want to do something with small caps here, and I do think there's a lag in terms of small caps with the banks and energy. I think they'll pop up. To put it into a more long-term perspective, what you do is you put the long-term on IWM, and then what you'll do is you can basically use the same date uh, on TNA, but it'll capture and have exposure to the short term a little bit better. But you still have a longer period there, and so you can, if it did continue to go, you could actually still push that TNA position that has a long-term contracts, but it's because it's leverage. You'll still get exposure to the short term a bit more because it's a little bit more violent on the price action. But again, if it did continue to trend, you could keep pushing that leverage position on the long term. So it kind of offers a little bit more, which is one of the very strange things about leveraged ETFs. They're so risky, but if it does set up a trend, it's an insane amount of points. So it still offers exposure to very short term moves because it's leveraged, but you can still buy out further expirations and fucking push it that way if you want. I mean, it's definitely possible. It's just not very pretty. You're up like 80%, then you're down 50% up. I mean, those things, you have to just look at it. You have to look past the numbers there. And that's what makes something here very difficult is as much as I want to buy this right here, I know timing is not very, it's not very active right now. It's not very good sort of when I think about perfect, of being perfect and buying right on my support. I know it's not like that right now. Not like on intraday, where I can go put this on intraday candles and figure that idea out. Right, we're not there right now. That's not it. So, but I still want to. Like I know I want to. So just kind of waiting and being a little bit more patient. Gonna let it come off the low, and I'll miss a few points, but I want to just be right. That's all. It's not about timing being perfect. It's about being right overall. And so keeping those ideas in mind a little bit more. Even if I have to miss a day or something, like those ideas, like I'm okay with that right now. I'm okay with missing a day to be able to push an extra day. Or these ideas matter more to me right now. I don't think anyone understands at all the math on the dollar. Again, we expect the dollar to be down here. The dollar's trying to race down here as fast as possible. One of the biggest sell days we've had so far on the dollar, which again should be very good for pushing up the equity market. Again, it doesn't matter that it's happening right now so much. It's just confirming the idea that we've already been speculating on. Uh, but I don't think people have a very good idea still of how much money this is or anything like that, or if it's even money that can be spent. I don't think anyone really knows. Because based on this, and then if we look at gold, for instance, gold has not appreciated equally to the dollar whatsoever, and not even close. So it's, and it hasn't gone to Bitcoin either, which is sort of our new spot. And then it hasn't specifically gone to the equity market. And now it hasn't gone to the bond market because the yields are up. So again, we're in this weird spot. It's not in Europe. It's not in oil because oil's break even. Natural gas is only up a tiny bit. And again, that's not directly by flow. So where the fuck's the money? That means money's gonna be entering, is it not? Money's gonna be doing something at some point. What are you waiting for? Does anybody know where the money's going? Anyone, can anyone guess? What do you do when you're pushing through all-time highs and you have a big fucking long position? You're creating a massive long, the whole market's creating a massive long position. What do you do to protect your position? And why is the market look the way it does right now? And how the money's working and how nothing is actually doing anything? No underlying markets are moving. They're actually all just going down, which it should basically, if one's going down, one should go up. Why is everything just going down equally? Anyone fucking know the word? Let me break the ice for you. This is a bad first date, I'll tell you. Not very talkative. Called hedging. Called hedging. That's what this price action is here. That's what we're seeing. No one's exiting long positions. The price is reacting to hedging. And that money that you see exiting the dollar, exiting the bond market, it's not specifically buying. It technically it is buying money. It's all money being, it's all inflow. It's being on the long side. But what's happening is hedging. And we know that's happening. It has been happening. And how do we know it's happening also right this moment? Is volatility is increasing in a different way. It's not increasing equally to the market being down because the market's not down very much. But we know that volatility bets have been lining up over the last couple weeks, right? We've seen plenty of different data showing that long vol bets are being put on because, again, volatility has dropped to pre-pandemic levels, which is on a lot of different ways just not correct. We understand it's not. And so people put long volatility bets on. I've even talked about it plenty, this idea that volatility is not really where it is here. And this being up the way it is right now is because of hedging. And we've seen this so many fucking times. When hedging gets involved, you will see something break the trend here and start to jump. It's not fear, it's hedge. It's a hedge. That's what this is here. That's what this is there. Just hedging. And what you get is this reaction here. Again, not long trades being sold because, again, if you go start to look at some of these things, you can see it a lot more clearly, right? And what you should be able to see is by the end of the day, you should see a new amount quantity, a new quantity of calls that have been created and written today. We should be able to quite literally be able to go look at option chains and see that there's a significantly larger quantity of calls out there. They're just being written to hedge, right? So you're in a long position, you sell calls. We should be able to see some of that. And I think that's probably the best read on it right now. For trying to read something intraday, that's about as good as it's going to get, I would say. There's not really any way for us to time things better, but we can understand macro ideas like that and see how looking at across our macro markets and understand, okay, these things, the only way these things add up is for what we've seen in the past, which are hedges coming in. And if you're in a long position and you're in all-time highs, you want to protect your position, right? You don't want to be free balling it up there, letting everyone look up your skirt up here. That's not going to happen. Get some. It's time to cover up. Cover call time. Cover calls. I think this is probably one of the better examples here. Is again, we still have some of these moves on the mega caps that are, the liquidity is really showing itself. How there's so much liquidity on the mega caps and the moves protected a little bit more. Again, I know it's down, but just in terms of the move. The Dow doing literally nothing is the fun. It's just is always so much fun. See if we can get through the supply here, the support. Now this makes the small cap move really interesting because now I might be able to have better timing. If I can understand that we're in a hedging mood, I might be able to time this a little bit better on small caps because, again, this pulls back a lot. All this is doing is reacting, again, to the market, to its averages, which what happens on small caps? They react violently to anything because they're just sensitive to price action. Very sensitive to price action. some of these positions that I want to grab, this is definitely a very interesting, I guess, time to be thinking about it. It's a nice candle so far. Very nice candle so far in terms of our price movement. We are still interacting with this trend line here. Wasn't sure if I was going to keep this here or not. This is sort of our low trend line from before. That sort of turned into a resistance back here. But it's definitely more of a support trend line. Interacting quite a bit. That made that decision a lot easier. A very nice bounce. I like how that corrected it for me. TradingView is like, let me move this up for you a little bit. Thanks, TradingView. It had the wick all the way down here, and then it's like, let me repopulate that. That pretty nice bounce on that trend line, I'd say. I'm not sure what that was. I know they shifted over to SIBO. Um, the it's not the actual exchanges, and so what it actually does is it doesn't I don't know if anyone else saw that. They probably got the update this morning. You can convert over to the real-time stuff, but specifically for what we're doing here, looking at the charts and stuff, it's actually a little bit better if you're not, again, you should be using real time through your broker anyway. But on TradingView, what it does is it doesn't show every single tick, and it actually just clumps them together. It actually, for charts, is a little bit better because there's a lot of times when we have these, you can see what just happened there, is we'll have intraday charts, but then the price isn't equal to where it is on the daily chart. It's like actually in a whole different spot, right? And you guys have seen that too, where you have a trend line from a daily, and then you put it to the intraday, and it's in a really like this right here, right? And it gets all fucked up like this. But if you just saw with the new pricing data, it actually it fixes where it is because it's not all the ticks, and so you don't get that candle down here. I love how I just screwed it up a little bit, but yeah, it is like that. It does. I think it's just because I refreshed it, but um, it should help with smoothing out some of the edges because you do get some of those wicks that come through, and then it's hard to tell completely. And not that it really matters at the moment, but sometimes it does, where it's hard to tell the ratio all the times. Like when you are trying to look at those intraday charts and you go, am I really on a level here? That's where you need to just know on the daily chart what the actual value is. You got to look at that daily and see, you go to the daily and you go, okay, here's my trend line. What's the actual price value here? And you look and you go, okay, this is 414.5, right? And then you go into the intraday, and it may not be perfect, right? It may be in a different spot. And if you go look, this wick is right at that 414.5 spot. That's where this wick is here, right? And so then it lines up a little bit better, and you go, oh, okay, that's exactly where it is. But I think it should help. We'll see if we get any more of these times when it adjusts for us a little bit. I'm not exactly sure what it. I Let's see. Oh, if it's. I think it's because I think it's because I have both. We'll see. But that was interesting. I like that. Wonder where we're gonna. We really need a better volatility metric. I'm so close to just making my own fucking volatility number, and we're gonna use that. I don't know how I would show it to you guys, but uh, there it is again. That's perfect. Much better. Yeah, I think we need a. I'm just gonna. I'll use There's a couple different data providers that you can create. I could even do it out of I can just use the R programming and just grab all of the IV numbers from all of the market from real-time data and put it into R and then have R populate a chart like the VIX does, but it's based on all IVs in the market. That that would literally be it. And then we can actually look at that live and you can see every single stock in the market, right? All based on like a percent wide in terms of the cap size and everything, in terms of how they would actually matter to the market price in the volatility overall. And you add up all the IVs together, and just like the VIX shows over a 30-day, you do that with these IVs, and you can look. You can change it from 30-day, look more short term, look maybe just to 1 week, look to 2 months, whatever the fuck you want to look at, and it can just be all the IVs together. I don't know why we don't have that and why it's not an actual thing. Again, I think it's probably because someone's already done that and then went, okay, probably keep that data to ourselves. Probably should just be done. Probably should be done. I mean, it probably is kind of, it's just so rough and it doesn't really add up day to day, but that's where you just have to read between the lines and be a little bit more, you know, understanding that sometimes, like today, for instance, you would look and you would see that there'd be a ton of hedging. And so your IVs would change drastically because of that. And I could look and say, okay, that noise on the values here around the trend that we've been on is because of hedging here. And I could see that. And I don't have to like make up ideas. I can just go, here's the data. It fucking shows it. Like people went from having an idea of here's the volatility, and then now IVs increased between the spreads, and I can go, okay, see how the spread widened here, and I can be like, that's because of this, right? And we don't have that. I can't go to the VIX and because again, this is bullshit that I have to go look at this dumb chart, and then I'm looking and I'm like, yeah, so see how see how this went up here, and if you look, it's not exactly the same as this here, and so like that shit is just is bogus, and I know that this is just ridiculous. It's just ridiculous that this is literally it. This is what we got. It's 2021 and this is fucking the volatility in the market. Okay. Thank you so much. The only thing that changes in the market is volatility, and this is what we got. Perfect. What the fuck? Oh, and by the way, the biggest, uh, the biggest thing that you can trade in terms of volatility, VXX. Here you go. This is what it is. How is this helpful? This is terrible. This is terrible. Please. It's the most important thing. Why do we shun it away by so much? It's like a letting a child live in a closet. Get it? Okay. Let's put this into perspective a little bit for timing. If we're starting Monday off with hedging, we're at all-time high. The dollar's coming down by so much, and I think you're going to have to react to some of that move unless all that money was put into don't think it changes the. I don't think we change our trend at all. I'm trying to figure out when's the time to do this. Again, we're buying everything, FYI. Just the timing is a little. It's more broad based. In terms of EVs and hmm, the problem is that earnings don't matter at all for Ford. They don't matter for Ford. The Tesla earnings, we care. I mean, I guess it's not. It's what we don't care about the earnings right now. We care about, again, future guidance and everything. We've already priced in all these ideas. That literally, the earnings mean nothing, nothing, literally nothing. It makes zero difference, right? And so again, it's the timing though in terms of that little bit of extra volume. This is really the point to be buying. Why does this candle look like this, by the way? That's not actually why it looks like that, but is today the lowest it's going to be this week? That's my question, right? I want to put my long position on. I could hold through. I could hold through like. If I put this in here at like the around 700, could hold. I guess it's really easy to get out of this. So I can just put the Tesla contract on because it's already expensive anyway, and I can get filled on a lot, and I'll be fine there. The Ford trade is not as simple because you need a lot of contracts, and they're cheap. This one's not as simple. But is this the lowest point? Because I do need exposure to EVs and this clean energy side I'm completely out of. Again, I'm long on everything except for the clean energy side, which is quite fucking ironic, to be honest with you, because it's kind of it's contrary to everything that you would think right now. And so it doesn't add up very well in terms of just a human understanding. Math, the price makes sense, but I think I'm just going to take all these right now. I don't really want to wait. I feel like waiting is never the because if you wait, then it means you're not sure. So I'm gonna take Tesla and Ford right now. The Ford again, I would be very careful if you're trying to buy that. I don't really. Uh, there's just so many that you have to spread out. Like I'm not gonna go buy 30,000. Like there's like 30,000 calls, for instance, on like one strike, and then it's like, well, okay, well, that's a lot of people that could sell. You have to spread out a lot. Tesla, you can just buy one fucking call. You're probably good. Cost cost 50,000. Perfect. Buy one fucking call. The classic. Like, oh, you gotta fill your. It's like, how do you fill 500,000? Like, oh, you just buy like 5 Tesla calls, 2 Amazon calls, 1 Google call. You're good. You're good. That's 500 grand right there. Like, oh, how do you? What if you want to? Oh, just go buy us and just go buy spy calls. Don't worry, there's plenty. Spy in the queues. You'll be good. Takes about, yeah, but how do you get filled so quick? Oh, it only takes about 2 minutes. Not a big deal. SQ is what, like, some of these, again, what I'm trying to say is these areas that I want a long-term trade on. Some of these I had short, so I want to put this perspective. When I took this trade here for Square Inc on SQ, I did not take a trade that I said I'm going to hold this for over a month. I took a trade to trade it from support to the trend line, made my 100%, right? And so what I've been looking for is, when do I make my long trades? So some of these, again, what you're looking at is a situation where a lot of points got on put on very quickly, but it was for a different reason. It was for a completely different reason in terms of how we were trading it. And so now when we're looking for these trades, I'm not looking for a trade that I'm just going to quickly be in and out of. I'm looking for my long term. And so some of these, again, they're in positions where it's like, okay, this is the opportunity right here. It may go down tomorrow. Okay. But can I get into a position that I'm comfortable with? Some of these, again, the patience and whether or not to do it. I think a lot of the problem for me is that I'm already long on fucking 90% of the market. And it's only in these areas that I've made quite a bit of money recently that I'm not in long positions on, because I took profit last week. Took profit on those short-term moves. One of the hardest questions to still answer, again, is how do you get back into a position? It's one of the hardest things to do, is to take profit on something and to go re-enter it and to know to do that and put money there. It's so fucking difficult. Your frame of view is just, it's so fucked up, because if you just made money or if you lost money on something, like, it's just a different, you're looking at it differently. And so especially um some of these other ones that are, I feel very much like I'm forcing too much, and I'm sure a lot of you feel that way as well. I've talked about the Tesla a lot, and I try to use I try to use Tesla as the example the most, because I mean, it really is the thing that most people have traded and made money on. uh a lot. I mean, we all made a fuck ton of money in here, and then that's where people are not willing to short it here, and I made a fuck ton of money shorting it here, and then it's very hard to do that, and then it's very hard to stop yourself from trying to buy it all the time in here. It's the same as knowing to take profit. And these things are, it's a good example of a chart that has nothing to really do with anything other than people's decision making and how they want to trade, because it's the best example of supply and demand really there is, because this shouldn't this shouldn't really happen in terms of value. None of this, but again, it's just supply and demand. Oh, that's it. Yeah. Oh, there's only so many shares. Okay. Well, again, this approach here, I think, is a good spot. Very nice. See, 700 to, again, some of this idea here is like, you go from 700, and we're talking about, for a month from now, the all-time high, it's 25% or something like that. That's the average velocity. So see, I mean, again, that's just where the market is right now. So, and then again, my biggest worry right now is that I make some of these trades, and this is why I got out of short-term trades so quickly, is that you make some of these trades, and then in a month from now, it's still trending. And now what do? Well, you take profit on those moves, but now you have to buy brand new long-term positions again that are really fucking expensive, and it's going to be almost impossible to do that. And so, again, you're kind of, This is where those people that are sort of entrenched into long positions with shares and things like that, they just keep riding the market, and they don't have to make decisions. But we're trying to capture moves, and if things continue to trend a lot, not simple, not easy. Don't know. We have to control what we can, and again, that's controlling the trading that happens in these moments. So taking this moment and then taking the moment here to get something longer, and we'll have to find the next time that we put new long positions on, right? That transition, it's not going to be, it's going to get harder, that's for sure. Because again, there's going to be some weird pullbacks that are not real pullbacks, and it's going to be difficult. I think an interesting chart to look at is the S&P year over year chart. And if you look what that chart looks like is it looks like this. So like through the years, right, it looks like this. And right now, we're like up here. This is the year over year chart. So like the percent gain and loss year over year, and this is where we are, like we're up here. And so it's like, well, technically it should just be coming down at some point. But that's like the weird spot that we're in is like, okay, year over year, here's the percent change. And we're way up here. We're pretty high up above where it usually peaks out and then it comes back down. And so, but the thing to remember is that when you look at data like that, and I was looking at that chart, it's like, okay, well, year over year, we're at a much higher percent than ever before. But the thing to remember is that where we are in terms of the last year is COVID still. So we're coming out of this percent, this low. And so when you add it up, it's actually, we're not actually even that close to the actual year over year percent. We're actually 30%. We have this whole 30% that we are masking because we came out of the low. We just continue the trend. It's the same fucking trend as before. It's just 30% lower. And so again, it's like, and this happened so quickly. It's like it was the shortest bear market ever. That's the funniest part. And so this has really fucked people's understanding of everything. It's not understanding this. And that's the hardest part is everyone's looking for a fucking crash in the market. And it's like, I'll give you one. I'll fucking give you one. It's right here and it just fucking happened. You guys are not looking at it. You're not looking at the fucking thing in front of you, right? And that's like the biggest thing is when I talk to other people that like know their shit, they keep going that the market can't keep going up because it needs to correct and crash. Like that's healthy market is it will, it goes up and it comes down. And they're like, we haven't had a crash since 2008. And I'm like, open your fucking eyeballs. What are you not looking at? What do you not understand about? And the problem is that it happened so quick. That's literally the only issue is the tempo. It happened so quickly over just a few, again, like 2.5 weeks. That was it. From the top to the bottom. And that's the problem. And then everyone keeps going, no, we need a crash. We need a crash. We've only been trending upwards for a year. Since the last one. It's only been a year. Only been a year. And so again, it's like, it's because of fucking this really strange thing that happened, right? I think it's still, and that's where I'm trying to, again, that's where like everything in terms of what I'm talking about right now, that's where it comes from. This idea of long term and stuff because we already had the crash. And maybe that's something that I need to say, like I just said it, but it might be something you have to remember. Like every day that you look at the price continue to go up, just remember we just fucking crashed a year ago. This actually happened. And the economy did enter a recession. Do you know what happened thereafter? It's just that we were really good at getting the fuck out of it. The Fed, the way they handled it, they immediately turned the printer on. They immediately provided liquidity. The government immediately stepped in, right? Those things, that's the only difference. And that's where we understand that when those things happen, we're going to be a lot quicker, right? And so we're going to be able to protect the markets and prices a lot better in the future, just like we just did. But again, we did fucking crash. Like, And I think about that every single time I see somebody talk about the price continue to increase here, is that when you're looking for a crash, I'll fucking show you one. Just zoom out a little bit and you'll see it, right? And I think it is important to keep in mind that we're very raw in that situation still. Like it's that still is very raw in everyone's mind, but it's so overlooked, I would say. So overlooked, which is pretty funny considering 2008 stayed in people's minds for fucking ever. It took I mean, how many years did that take? It took like 4 years for us to finally be like accepting of what happened in 2008. And again, we were still really fucked up, but in terms of people being like, okay, we can get going here. Market's gonna pick up here. And like 2012 was like, okay, yeah, we can get going here. But like right now, we never had that because it happened immediately. It was instantly. It was just in like it was only in like April and May that we were like, and then we were like, oh, okay, yeah, we're good. So we forgot about it. Crashes? What do you mean? We haven't had a crash in fucking 13 years. We haven't lost more than 10% in 13 years. It's because the fucking hogs, they looked at their 401ks and they only had 2 weeks to look at it that it was down. Fucking 2 weeks later, it was up. What do you mean my 401k are down 35%? Last time I looked at it, we're doing pretty good. Fucking hog brain. Elon should have just put the chip into a hog's brain, made them play Pong. Fuck the chimps, put them in a hog brain. Get a hog in there eating some McDonald's. You know, the monkey eating the banana smoothie, playing the Pong game that Elon put his chip in. Get a hog in there, give him some burgers. Should have done it on Trump, to be honest with you. Put the chip in Trump's brain. Get him to play some Pong. Or maybe get him to, you know, be a little bit better of a human, you know. Maybe admit that some of those things were wrong. Throw you a good start. Be fun. Too much? Something to think about. The crash idea. It's interesting to think about. IXRT, yeah, it's been a very interesting chart so far. Definitely hard to read. I talked a little bit about how it's just difficult. This day here really fucked with me a lot too. It was this selling day. We had a lot of tickers do this selling and then immediate buying back and big price moves. And again, you're never gonna be perfect there, but let's see. Mouse says there's some price action coming in. Again, it's just hard to remove the bias. I think you just say, okay, it's gonna go up. So that's where, like, even in these candles, this is my problem on some of these charts. Okay, I take a short-term trade from here. Now my understanding is I want to take long-term trades. Okay, I could take a long-term trade Friday off of the pullback. Today, it opens, pulls back, take it here. Tomorrow, what if it comes down to support? Well, I'll take it there. And so this is where, like, some of these things, it's like, okay, it's just basically you can buy all the time. And so what are you looking for, specifically? And this is where just creating rules for yourself. All right, I'm not going to trade past the first 30 minutes, for instance, is like my favorite rule to give people. Don't trade past the first 30 minutes of the day. That's the only time you're allowed to trade. I've had a friend of mine, or if I had friends of mine that I've told that, or other people I've told that through my time doing this, that just trading in the first 30 minutes will stop you from losing money. To turn the corner to profitability, just only trade the first 30 minutes. And then once you can do that, then you can go from there, right? And it's so funny how that kind of thing, but doing that right now is really a great way to do long positions, and I think it's probably a good start because there's a good thing to do in terms of the mentality we're doing right now. Only long trades from the first 30 minutes and only 3 month out options right now. If you do that, you're not going to lose money. You may not make as much money as you think you could make, but a lot of the times what we think we can do and what we actually do are completely different things, right? Some of you have learned that the hard way. Some of you used to tell me you're going to make 500% this year. And then what happened? You made like $10 over the year. You just made enough money to pay your bills, right? 500% is not happening. 100%, the 100% you find out that is only 50%. Wait until you find out the hard lesson that I made 100% last year, but it's really only 50%. And then guess what? After that 50% of taxes, then another 30% goes to my fucking rent. And then you find out, oh, I went from rent and I bought an apartment. And so basically all the money I made last year was spent. You go from renting and then you finally make enough money to buy something. So you buy an apartment and then it goes to a mortgage, right? But it's like the money still doesn't, even if you remove expenses, it's like the percent gain is like, yeah. Played it poorly, was up 100% and held through the meltdown last week. Yeah. I mean, that will certainly happen. And I mean, if you took a long position so again, like that was this trade here that I took, this candle, what I would say in terms of like where we are now, we're obviously looking at things differently, but from like removing the long-term idea and just taking advantages, taking moments as they come, this candle here after I posted the chart immediately puts you into anytime you're going to take this trade now is like this short-term trade you're going to take because it's, again, the volatility involved, you understand. So when I took this trade here, for instance, right, very short term, and you have this very large gain here, and I think probably, I can't remember exactly what I said, but the thing is that it happens so quickly that you have to take that profit there. Now, if you take a long-term trade here, this is where, again, if you took a long-term trade here, you're still up, and I would still be in that position probably. The only thing I'd be thinking about is like, how much time? How much time are you willing to hold through it to continue the move? Because I would expect this to continue going up, right? Obviously, I got the chart. So holding through here is probably worth it. Holding through here is probably worth it if you're still up, even if you're only up 10%, it's still probably worth it in a long-term sense because you're still up and you have your money that can work for you, that if it does continue up here, I mean, again, this would be, the timing is the hard part, is just understanding, well, how much time does it take then to continue? And then if you're not in a position that can hold through, definitely hard. And that's where this shit threw me off, right? This is where this shit threw me off because you had these candles, and there's like 100 charts that look like this where you have this very weird sell day that was followed by a big buy day. And so when you buy there, you're not buying 3 month out options. You're going, okay, well, anything I do here is probably short term. And so a lot of times you don't have the legs to make this work, which the best trade would to do that would have been 3 month options and hold through this. Because right now, like I just said, I would be buying here on Friday. I'd be buying here on Monday. And none of them are very good plans for anything because you don't really know with a long-term position other than, oh, I bet it's going to go up. And so at the end of the day, it doesn't matter now. And so that's where just buying earlier. The answer is always buying earlier. And so that's what maybe I haven't said this either, but common sense things I feel like should just be common sense. But the answer in this market is to buy earlier. So how do you do timing? You don't. You just fucking buy. And so that's what I've been trying to make clear, but I know it's hard. It's hard. The thing that should be heard is that the answer is to buy earlier. Your timing's not going to be perfect, but every time you look in hindsight capital always will tell you what? Oh, you should have just bought earlier, right? Well, that's why in the moment, what you should just basically do is that if you are going to do long-term trading and have an idea of a bias and you think it's true, then the answer is just to buy. And there's not a timing. Things will happen. Price won't stop. They won't just continue because your idea. Price will continue moving, but the answer is always just a buy earlier if that's what your plan is. Because trying to time it, what will happen again? Price will run away from you, and you get into these weird situations where you buy the top and sell the bottom, and you feel like an idiot. Like, and you just realize if you bought a week earlier, you would have been fine. That chart's definitely probably. I think in a week from now, we can look at that chart and it'll probably be something similar. And that's where it's like, okay, I could have bought Friday. You're down a little bit today, but you could keep holding through today. You could have bought today. Maybe you'll be down a little bit tomorrow, but like next week, 2 weeks from now, where's the price going to be? And that's literally what this whole thing was in here when I shifted my focus of going, okay, I just want to be in a position that I can say in a month from now that I did good by buying it here and not just buying here and selling here and like getting in and out of a trade. I can sit in this trade and in a month from now go, okay, you know what was good about this trade? Okay, here it's March, it's May 14th, May 17th. I'm going into the weekend and I go, you know what I did right here and what I did well? I just bought a month ago. That's what I did right. And it's almost always like that. It's almost always like that. But we understand when it's different because over here is a lot of short-term volatility. So what are we doing? We're using what we're good at. We're buying pullbacks and swinging trades, right? It's what we're doing in here. But over here, we understand it's just a little different. A little different. A lot of times, yeah, you can just always go back and say, if I bought a month ago, I'd be up and that was the best trade, right? And I mean, it's important to realize that that's basically always the answer. And it's when we deviate from that we make these different decisions, but usually that's the answer, right? You just throw the money in and you're good, and that's the whole point of investing. But yeah, some of these, where we are, it's hard to look at individual figures again here today. I think, let me see, some of these again on the sell side, they were on the to be expected side. Some of these have fallen out. A lot of these moves, again, we're getting the same move across on a lot of the growth tickers, which again is the to be expected move. I would say from sort of what we've seen is again the growth. I'm saying in the sense that it's growth that's doing it. We're getting the growth tickers that are doing these. Oh, we're up. Oh, now we're pulling back like an equal amount. This up and down. It's the growth side. The value side is not doing that still. Only this side. And so when we take those trades, the trade on the growth side that are doing these pullbacks like snap here, the only way you're taking these trades are on levels, because otherwise what's happening is you have prices only pulling back so violently because it pushed to the upside so violently, right? That's the only reason why a lot of these growth tickers are pulling back so much, because they put so many points on so quickly. And so it's important to realize that those are all opportunities, but they're only an opportunity if there's something actually there. Like, yeah, they'll go up in a month, but you don't know where, and so you don't know timing. Only way to do it is if you get a level. That you get a fucking level, then it's lights out. You're either buying it there, and this is where you give it time. Like Ford this morning is a good example. You could have been like, well, let me just go buy this on support. But again, it's been on support for a fucking week, right? It's been here for a week. And so this is where, as much as I want to go buy this here, it's like I know at the end of the day that that's not the decision. Now it's down here, and now I feel better buying it down here, right? And so that's one of those, okay, it was up, and now it's down. And yeah, in a month it'll be up. But from where do I want to, entrench myself and try to work my way out of? That is not easy. I mean, a lot of times it needs to be pretty clear to make a confident decision, I would say. Especially when we have a lot of these tickers that have been doing very well. I like the K move here. We did very well with the K move coming out of the low here. Again, we have this chart here. I think I posted the chart twice. We have the chart through here. Very, very nice move. And Again, a lot of these, the food and beverage distribution and then the transportation side has been doing very well. These moves have been pretty clinical. I would say this is pretty. I mean, it doesn't get much. I mean, when we talk about patterns and things standing out, it doesn't get much more obvious than moves like this. So, especially when it involves levels like this, not just trends. But so what I'm saying is, in terms of putting money in places, you definitely want to be putting it in the on the sides that are continuing to trend up over some of those growth that are pulling back down again. Um, there's no promises on those charts. No promises, no guarantees. Some of those ones are swinging back and forth. There, I mean, you're literally playing with some fire there. Be interesting to see how the landscape changes on some of these communications charts again. Some of this shit is just Jesus. Trying to figure out the. I mean, it would take you a fucking year to figure out some of the ins and outs of the flow here. But for instance, like T and Verizon that got pushed down here after we had a lot of those. Again, we captured we captured a lot of the moves that went to the upside here, right? Um, now again, I mean, whatever you want to call some of it. Some of these moves again now turn into when we look at some of the positions that are going to offer some points here. Again, it's not pretty and it's not like great, but for instance, the T chart that I posted that we captured this move here. Now again, this type of thing happens, and you just have to remove it if you lost money here. It happens. Maybe hopefully you captured some of those other communications charts. Uh, but again, there's like things here that just can't be understood very well. But there's definitely some points to be made here. And if we think about it, this chart is fucking terrible. It's terrible. But if we take into consideration this move up here, this is the kind of thing that be looking for that, okay, I'm looking for long-term trades. I want some value. Okay, well, there's still some value to be had here, and I don't know, but I know I'm not going to probably get hurt again over here, right? Probably not going to get hurt over here. So, you look out and you go, okay, I can swing this up here over a month. This over a month. Yeah, here's your not even juxtaposed. It's just, yep, one went down, one went up. And here's a good example, like Mobscoot's just showing like the iHeart chart and how you buy and then you hold through a pullback. This is exactly what I was just saying earlier about our other chart, like the Myrna chart, mRNA, right? Is that it took off very quickly above its trend. But we have a long-term understanding of possibly the trend it's going to be on, but it's just putting on so many more points quickly. This is where, depending on what kind of trade you made here, in whether or not you put a long-term or a short-term, holding through this is no problem, right? It's not a big deal. And you just keep pushing through. And a lot of times, you don't even care if it came back down to where a few points lower because you're just trying to hold the position longer anyway. And so you would have just picked it up again to begin with. So sometimes you can take profit on a little bit of it and then add in more, right? Sometimes you take a long-term trade, you get a lot of points quick, so you take a little bit of profit, maybe your cost, and then as it pulled back, then you added more because you were going to add more anyway. And so sometimes there are ways to work with. You have an expectation, not in the right spot. You have an expectation of a trend and sort of how many points over a certain amount of time. So that's what you're doing there is is literally just you're trying to predict a volatility. That's it. And this is where if you're doing options, the only thing you're doing when you're trying to figure out the price of an option is in the Black-Scholes model, you're putting in a volatility number, right? You're putting in how much volatility you think, and then it spits out a price. This is a volatility. That's it. You're betting on a certain level of volatility. So here's your volatility. If you get more volatility than expected, sometimes what you can do here is you can take profit on some of that because you have an expectation that due to it having more volatility than it really should have, it's going to pull back. And so then you can just add on more points anyway. And so is it going to run away from you like this? Most times, no. Most time, no. It's going to pull back. And so on these type of things here, even if you did take long-term trade, you can tell yourself and convince yourself in a lot of ways that, okay, this thing could just keep going forever. But at the end of the day, you know better. And you can take profit on some of these moves and know that you can add in again down here, in that the price that you're going to pay here may be more than the price that you had for an average here. But you know that taking the profit here is guaranteed money, and it's not guaranteed over here because this could keep trending down for the next year. You don't fucking know. And that was guaranteed money. And so a lot of times it just depends on your level, how you're going to trade it, what your expectations are, what you thought in the first place, and a lot of times it's about the only thing that matters is being consistent. That's what matters at the end of the day. And if you do the same thing every time, then you have a better place to start from because then you can always make the right decision for yourself. Sometimes the best situation here is just to push one position for fucking eternity, but you don't get to, no one's can trade like that. And so you have to make decisions. And if you are consistent and you go, okay, I'm going to enter a long position. Oh, wow, a lot of points quickly. Let me take profit on half of that and then add in more positions here because I know even though I'm paying more than my average, I get to take that profit home now. And so that means more than paying a little bit extra here because at the end of the day, I'm still up in profit even when I buy more here. And that's how I'm going to do it every time on every chart, no matter what. Because again, you see the same patterns over and over, right? Same price action because we all trade the same way. And why did price pull back here and why do those other charts do that? Because it's how everyone's trading it. They bought in here and price got up very quickly. So what they did was they took some home. And if price comes up right here, it's because they bought here. They say, you know what? Let me take some of home. This is much sharper than the trend. And then once the price comes back down to where we expect the trend to be, people are going to start to buy it again, right? And put it onto this trend here, right? That's it. Literally, and that's why it's so easy to say that in hindsight, of course. But I'm just saying, all of us, when we're looking at patterns, that's all patterns are, is that it's some behavior that we all do over and over, right? And we can understand it after it happens and then use it. And so we use it the best we can in the moment, and that's by being disciplined, doing the same thing over and over. And, again, you get it to a point where it evens out on a marginal level to making profit. But if you do something different every time, then you have no fucking clue, obviously. Like, well, I made 100% this time, so that was definitely the right decision. But then you do it the next time and you lose 100%. And that's the benefit of doing it for a long fucking time. I'm not a big fan of the SC candle here so far. And there's a lot of different ideas on banks, and I don't mean that this is going to stop. I just mean it might be a pullback, might be a down candle tomorrow. It's up 0.5%. I'm just talking about the candle there, very short-term pattern. These banks, I just expect to continue to go. They need to find their trend though. For instance, this is not the trend that's going to be on it. It needs to find its trend. For now though, some of these charts are just wild, and that's where a lot of this expectation for this average to do better, it's been doing very poorly. Very poor average. I do expect them to come out of here and to put some points on because of the small cap banks. And again, look at this trend here. It's so funny to see the candles over the last couple days since earnings started, and it's hard to put into perspective what you see during the day. Like this shit, you try to put this into perspective of what's happening in the moment, and you're like, Jesus Christ, what's going on? And then you look at the daily and you're like, oh, okay. What am I wasting my time for? Okay, it's good Monday here so far. In terms of a trend, no surprises. Again, that's what we're looking for is consistency in terms of the trend, and we are looking for healthy price movement. So again, we couldn't consistently trend that way. We need to be on a trend, and so having this 0.5% here on the S&P and with the Nasdaq 1% here. Okay, when we look, we start to look through. We can see some of the price action and see where it is. It's really not on this side on the high liquidity side. Tesla, we got off the low here, and again, so this would made up a lot of why we're down 1%. Not that it equals that much, but some of these moves have not been that hard to read, I would say. So again, we have some pretty good consistency. Where some of the selling is on, I mean, we understand it to be some of these things like Blink continues to sell down. We understand there's charts that put a lot of points on very quickly, right? And have taken profit a little bit more. So these are adding up to the sell side. So again, think about where the average is adding up right now. Nasdaq's down 1%. Why? Because it's been up so much so quickly. That's it, right? And so again, when we start to put into perspective a little bit, besides some of the, I would say there's some COVID winners that are still pretty weak, and so those are still continuing to pull the price down a little bit. But a lot of it again is due to the very, very sharp price move. If TSM comes down to support, still trying to keep a gauge on our semiconductors. Again, for instance, here in NVIDIA, right? It should be able to. This should not. It should not change anyone's view when you see candles like this, and that's where it's very hard to gauge other than going, okay, here's the 25th when we bought everything. Look at how many days in a row it's gone up here, right? It's a month. The goddamn month. And it's still up over 25% right there, right? And so, again, that's where you you gotta lengthen that time and say, okay, this one candle, all right, how's this one candle shape up to the other 30 candles I'm looking at? Okay, perfect. Got it. Now, it does change based on if you're trying to enter the chart or not, right? Because if you're trying to enter that trade there, well, now you're going to need to take into some different considerations of when's the best time to enter, and that's not exactly what we're looking at, though. Let's take a look. Does this chart get any tighter than this? About a 4% spread, high to low today so far. I would say today's digestion day based on the market so far. We had hedging. The ARC should again. Digestion day coming off of a high. Most of them I expect to go up. So like Square Ink bought off the low here. Close enough. PayPal looking just fucking monster. Where's eBay? Absolute fucking monster. Jesus. Disgusting to look at. Okay, so I expect all those to go up. Bit of a digestion to start the week. I think there's definitely some different things tied in there. News trading and retail trading is certainly to be at fault. I I hate to do this, but I'm just trying to. I don't trade IPOs, but I feel like this is so strange. Let me just do this. What is this? Um, 45 degrees. Oh God. Okay, so that's the average trend. FYI, 45 degrees. That was 44. 45 degrees is the average angle of a trend line, right? That's like the trend line of the market. Basically 45-degree angle all the time. And then there's volatility around it. How funny is that? It's its lows have all trended on the average trend line from an IPO start. Kind of weird. It almost makes me want to go take the trade. It's tightening here. Like, I wouldn't take it down in here or something, but now it's tightening here as well, which means it needs to get out of this trend line here, this tightening. It needs to go one way or the other. If today is our digestion day and the market goes up tomorrow, then this would probably go up with it just from demand alone. And retail's going to go buy it if it gets momentum. And I'm trying to take long-term trades. And if I think ARK is going to get flows and these ideas are going to get flows, let's see. What's the math? Not like, see, that's too much though. Wait a second. I think the chart might be, let me see. Yeah, I can't tell yet. See, that's too much. Maybe not. Risk reward, if in 30 days, that's 22 trading days, your risk is a gap down. And you couldn't sell that much. There's not enough liquidity. There's not enough liquidity to gap down very much. Or, like, I mean, in the sense that there's not enough after hours or pre-market trading right now because it's IPO'd to really do much. There is the earnings date way over here, so you got plenty of time to trade until then. That might be a nice long-term, like a long-term trade as in like a 1 month hold up to earnings, and then I can, based on the market, make a decision that's not revolving around earnings, because this is like, people are going to actually react to this earnings on Coinbase, which is, I would not really want to have to trade through that, because that's like, I know people are going to react to this earnings. And so unless I actually had an understanding of where the price was and how it would react, then I wouldn't want to be involved. But that's much further away. That's a month away. I mean, trading, this would be a month and a half away. But, interesting. Has anyone here bought coin? I know there's not many of us in the call right now, but have any of you bought coin at all? I don't mean Bitcoin. I just mean Coinbase. Guessing a lot of my not wanting to trade IPOs is carried over to some of you, but after this, take a break for lunch. Good start to the week. 330. See how much if it was over that. If it's at the 3, I could get filled on everything immediately if it's at 330. So 300 shares is 100,000. Not gonna buy that much. 200 is what, 66. 200 is 66,000. 66. You buy, if I buy 200 shares right here and the price goes up 30% in a month, that would be the 20 grand profit, $20,000 profit. I can make that somewhere else. The problem with the shares that if I'm going to make 30% in a month, I have less risk because it's shares, but it doesn't technically, that doesn't actually technically give me less risk if it's over a month, because I can actually protect myself with the premium a little bit better. Whenever I do calculations in terms of whether should I buy shares on something, will that make me more or should I just trade with options? I think this will go up here. What I just said with the trend line here, it's probably going to ride that trend line. But that would be 30% in a month. And if I go, I would have to spend a significant amount of money for it to actually add up more than for me just to go spend 10% of the amount I would put here to make that money in a month because of leverage with options. And like when I put risk reward, that's sort of the problem. It would cost me, so if I bought, 200 shares right here, it would cost 66,000, and I could make I could make $20,000 profit in 1 month for 30% gain. But if you then put that into perspective, that cost me 66,000. I could go put 66 on a Tesla, like what I just paid for Tesla call, right? That'd be 2 Tesla calls in 30% in a month. With I would be making significantly more on that than 20,000 if that actually worked out. So both of them are basically trying to predict the same move to the upside, but one of them I can only lose the premium, and it's because of that it's actually a much shorter amount that you can lose on the risk side. So I'm actually risking less. I'm risking more in the short term on the options, but I'm risking less over that amount of time because of the ability to, again, it's an option. And then the actual gain, the reward actually outweighs by so much because of the shares. So, at the end of the day, unless you bought 500 shares here or something, it still doesn't work out. It would need to go up significantly more. Now, I expect it to go up here, but it would have to clear this, and I just don't see that fucking happening. Not to get, you would have to really, 100%, like if I put into perspective 100% trade here, fuck me, that would be ridiculous. 100% on that is insane. We would literally be crashing. The market would have to crash if that fucking happened. Goes from 100 billion to 200 billion in a week or something. Like we would literally, people would be jumping out the windows in New York right now. So those things are not going to happen. At the end of the day, being a small being small time traders, we have such better chances using options in operating in that space, finding alpha, because it requires so much money to make shares work, I think, at the end of the day. Like, you can still make money, but I just mean in the sense that you're able to do something. If you're good at something, you should get paid for it. And I don't mean that even if you're good at trading, but you should get paid for the risk. And you do with options, at least. Especially if you're levered. You get such good leverage with them. You don't have to spend very much. It's fucking a beauty to behold. You're gonna go spend all the money to buy the shares, but you only need to buy. And think about it. It costs nothing to buy fucking options. Nothing at all. Buy 100 of them. It's so funny. I wish I was there for the conversations of someone in the invention of options. You'd be like, yeah, this is 100 shares, and you can buy 100 shares that cost $100 for 1 cent. I was like, perfect. Those are good odds. Good leverage. Like, some of the ideas are, it's such a weird, whoever thinks about these things and then creates them, such a fucking strange concept. All right, folks. Yeah, I like the move here, and I think it's not so much if we can take a trade or not. It's about its impact and the things we think about, and also just thinking of technical trading of, okay, we have a pretty understandable trend line here. Let's see if that actually holds here or not, because a lot of it does matter on. When we look at some of the arc ideas here. We look at squaring this low here, based on how we're looking at the market, is actually not a bad thing. And so it's actually like an opportunity to buy some of these if you haven't done so, right? And so that also is kind of where the coin move is. These all should, basically, they're all the same thing. Should all be moving together. Not that they're the same thing, but sectors. So let's see. That's something I'm looking for again. Uh, it's very much a mixed day. It's kind of a flat day. Digesting the move so far. No real anything I say. Hedging is mostly what's going on, and it's mostly a macro story. Equity market's not doing much right this moment. Just same trend. It's this type of story here. This is very different from the last month or so. So things like the dollar, we'll see by close if we can get some moves there. And then the other thing is if this starts to change a little bit, and so you can see some of the dollar, we had higher yields, bonds were being sold, yields are going down, people are buying short-term bonds right now or something, so that's not lining up with where the dollar was going bid though. So we'll see if we can add some of these things up at close. Again, we're long-term trading, we're not really looking for anything, so lunch should basically no one should be trading. So if you find yourself trading during lunch and you're trying to trade yourself out of a situation, then that means you should just sell whatever it is you're trying to do already. Yeah, you should definitely not be trying to average or anything during lunch. So that would be probably a big worry if you're doing that. So if you feel like you're doing something, if you feel like you're like watching something right now and you're nervous about it, then again, I'm gonna try to say this every day before lunch. If you're watching something right now and you're nervous about it, just sell it. Honestly, sell it right now. If you're down 30% and you're not sure if it's going to go back up, sell it right now for a 30% loss. If you're up 100% right now, you're up 20%, and you're not sure if it's going to go down and you're fucking staring at it right now and you're seeing it go down, sell it right now, right? Those are that right now, it should dominate your thinking, and you should not have to right now watch price action. Things can happen and you're gonna have to fucking react, right? Market starts going down, crashing, you'll have to react because we'll all have to react the same way. But that's not how you do things, right? You don't go, well, I'm not getting on this fucking plane because planes have crashed in the past, so fuck this plane ride. I'm gonna drive because driving is obviously so much safer than flying. Or I'm gonna walk there because walking, I only need to worry about getting hit by cars, not being in a car accident. Like, we don't do that, right? But what we can do is go, I don't want to have to worry like that, so I'm just gonna not be in a position that makes me worry. And so That's really the mentality we're in right now. Having a good time, enjoying the ride. Uh, we'll see how far our ride goes, right? But the price action is going to be terrible during lunches. I can almost guarantee it. We'll look at price action during lunch. We come into close. Maybe we'll turn the 5-minute candles on. It's not going to look pretty. Not in this kind of not when we're here and we're confirming it again this week. Not going to be good. So good. Up, down, it's on the trend. That's what matters, right? I will see you guys this afternoon. Enjoy your lunch. Drink some water. Get some exercise. Do something. I'm going to be getting a little exercise. Get on the piton. I got a class coming up, 12:30. Get on the piton, try to get that number 1 spot. After that, we'll see what happens. But I'll see you guys this afternoon. Enjoy.